And we're live. Hello and welcome to Game Theory Gang episode number 9. Game Theory Gang is a show about the incentives and insights that matter in crypto. GTG is a show by HEX millionaires for HEX millionaires and millionaires to be, as well as everyone who sacrificed for PulseChain and PulseX. If you're new and want to get caught up, you can ask questions to other members of the live stream or go to my beginner playlist at hexcontract.com. Get up to speed so you can enjoy this show every Tuesday night, along with the other 5,000 viewers who watch consistently and make up our sub community. As a community, we have an incentive to stick together and grow together for 15 years while we watch our HEX stakes appreciate. Thank you so much for being a supporter and for paying your future self with HEX and the advanced knowledge you can derive from learning each week. Tonight, we're bringing you the third week in a row that we have guests who have founded a product built on HEX and PulseChain. Tonight, we are joined by Maximus HEX smart contract founders who made DeFi history this past month by trustlessly crowdsourcing one of the top 5 largest and longest HEX stakes ever created. First, I will review for a couple minutes here some of the crypto news that we've had, and then we'll get to this amazing interview and game theory discussion. First item is that Facebook says it will use its platform Instagram to allow NFTs from multiple chains. So today is the first day we're streaming on Insta as well as YouTube and Twitter and Twitch to save the wrecked NFT crowd to be. So please follow now. Hopefully you're following on YouTube. Go ahead and hit the like and follow button there and comment nice things on all the platforms to show support for the show. We're trying to get to 10K subs on this channel, so please subscribe on the YouTubes. In other news, and I've got a tweet to back this up. This is amazing. 200,000 HEX postcards have been sent to the richest zip codes in America. And this is by our known community member, Togo, who has created some other really cool things in the HEX community. And so we're really excited to see these postcards going out, people donating their own money in order to raise awareness and get around the gatekeeping that's occurred. In other news, UST lost its peg, perhaps due to a hedge fund squeeze. HEX users who only use HEX are unaffected. And also, the founder of HEX and PulseChain, PulseChain will launch in the next 14 days, we heard today from Richard Hart, who stated on a stream with Wendy O that he will create his own stablecoin. And if knowing the exact launch date of PulseChain was even possible, which it's not because software is hard, it would still be advantageous to be patient and kept in the dark on exactly when it will launch, because repelling traders helps the natural price action of a thing. And there are other advantages as well to that game theory of not knowing, although the excitement is building and we can tell. And that's because there are a lot of people here in the crypto space that don't like being held ransom by ETH miners. I get the impression that a mega amount of stuff is being built on PulseChain and everyone's waiting for this big synchronization of virality and vampire attack of millions of people coming to get their free money and switching over on their MetaMask accounts. So that's really exciting. One of the things that's launching soon is Staker App V2, which has been in production for over a year and appears to be ready for alpha testing soon. And the sign up for that is live. If you're a good tester, you'll already know where to look to find that. There's a warning about a copycat scam for Pulse Dogecoin. It's like cats and dogs out there. You have been warned. And basically the idea is don't connect to stuff that is not made by the official creators. It looks like this week, the largest HEX stake in existence, somebody can fact check me on this, came out this week. It ended its time lock. And stay tuned to find out what happened to all this HEX that is now liquid on the market. Let's see. Next story. So the highest of stakes, which is a Netflix style documentary, said that they will tease behind the scenes Richard Hart clips for the next 7 days in anticipation of PulseChain launching. And in the final news story of this segment, I'm honored to announce that the Pulse Conference online event is something that I will be hosting here in mid-July. And that'll be for the 1-year anniversary of the PulseChain sacrifice. So there are many more announcements to follow regarding this event, because it's definitely going to be bigger and better than any other event I've done. So stay tuned. And without any further ado, now I want to bring up my co-host, David Feeder, the validator himself, and Tantan Nomanai, the Maximus.cash creator, who also goes by Dipcatcher. Welcome.
Hey guys, thanks for having me on.
Yeah, man, good to see you.
We're really excited to have you on the stream because, as most people know, there's a lot of advanced users that watch the show, a lot of multimillionaires in HEX, and so this is a really special community, and we're just really excited to bring more awareness to what you've done, and this big experiment that is DeFi, because I think what you did is important for people to understand.
Yeah, thank you. Yeah, it's all all in due time, and I think everything that we did with Maximus, it really just it was only made possible because of how well HEX was built, and so kind of like this whole the culture of truly trustless DeFi, unstoppable smart contracts. That's really important, and that's what really enabled Maximus to exist. And I think that what we're seeing, the response from everybody, it's just I think a reflection of that. And so I definitely feel like we're standing on the shoulders of giants here.
That's awesome. Yeah, I'd love to go over, for people who are new to the idea of Maximus, if you could give a description of what it is and what, maybe start off with what your background is.
Yeah. So my background's in engineering. I studied optical engineering in college. So I was going down a route of 3D imaging for medical and defense applications. So I was more in kind of lab science and physics and stuff like that. And then during my senior year of college, I took this entrepreneurship capstone class, and where we had to come up with an idea, and then kind of build out a fake business, but we had to build out something real. And so I built it using my optical engineering background. I built this 3D camera and virtual reality app. So it's kind of like VR Instagram. And that was the first thing that Goldkey and I worked on together. Him and I, we grew up together, longtime best friends since we were children. And everything that we do, we just kind of do together. And so we launched that startup right out of college. We had some, a couple dozen people thought it was the coolest thing they ever saw. So, we kind of started small. That was our first thing. That was what got us into crypto, because we actually got funded. We'd raised a little bit of money for that startup, and we'd actually raised money from a crypto startup called Simple Token. It was an ICO from the 2017 days, where they were building a platform that you could launch your own token in your app. We thought this could work with our VR app. So we reached out over Telegram, cut some deal with them where they were paying us in their token. And that was our income for 2 years, was, this developer grant that we got to build on top of their platform. We tried building something, never actually launched it, but that's what really got us into crypto. I was into wonky, virtual reality and augmented reality visualization technology. I was not into finance. I didn't know anything about trading, nothing about investing, but suddenly all of my startups income is in crypto that I have to, it's in a shit coin that, it pumped from 6 cents to like $1.40 and then dumped forever. It has like the classic 2017 ICO chart of like crazed euphoria. It was like right at the end. It was like November of 2017 when it launched. So right at the end, pumped for like 2 months, and then like I don't think it's listed anywhere now. And so just that experience was really what threw me into the crypto fire, because I had to figure out how to do the wallets, how to set up the exchanges. That was when I started listening to Richard Hart, because I was like learning, what I gained from him was like a lot of like practical knowledge and like how to think about crypto. And so that was what kind of got that that was like my early background. We shut that startup down. Goldkey and I were also working on a legal tech startup, where there was a startup centered around helping people who got screwed over by big corporations. We got people their money back. So, the largest companies that Comcast, AT&T, Verizon, T-Mobile, the product that Goldkey and I built there, that got, hundreds of thousands of people, over $10 million in legal settlements. So we were working on this like legal technology platform for a couple of years.
Wow.
And then, we didn't start that. We joined that startup. They were like right a couple steps before we were when we shut down our startup. And so, we had been working kind of in like legal and financial tech for a while. And then now we just kind of do like freelance work. So Goldkey and I have been building products together since 2015 now. And so, everything we're doing, we're doing together. And so, it all kind of, all that whole experience with, like getting into crypto for our first startup, and then, learning about it, a lot from Richard Hart. That's kind of what led us to knowing about HEX. And then, the rest is history from there. And then, how that all led into Maximus was,
so you were an early HEX adopter, is that right?
Yeah. So I was one of the first people to ever tweet about HEX.
Wow.
Like first one to ever tweet, like I remember it's pinned on my Twitter, where it was a couple months before launch. I said, a rare endorsement I make to new coins is the upcoming ERC20 certificate of deposit coin, HEX Crypto. And so, early evangelist there. I first mentioned HEX to anybody, to a friend of mine who worked at a big fixed income fund in August of 2019. And so I was like, hey dude, like check out this HEX thing that's coming out. And his response was, hey man, don't like take my job here. Cause he literally works in like a fixed income, like he's like a bond trader pretty much. And so, I'd kind of, been watching it, and then, like when the time was right, the time was right. And then, but yeah, so kind of this concept of pooling stakes, it actually like occurred to me before HEX even launched. In one of Richard's streams before HEX, he actually mentioned that like the reason why Bigger Pays Better existed was to incentivize people to like bundle stakes instead of doing it on their own, just to make it more gas efficient. So that was like his remark there. So that kind of like gave me the initial idea. And then he had talked about it, just in various interviews. We have a video on Goldkey's YouTube that kind of shows all the different times he's talked about like this concept. So, I'd heard, straight from the source about like kind of thinking about this concept. And then it really became urgent to build Maximus, which for the people that are watching that don't know, Maximus is a trustless, tradable HEX stake. So rather than staking on your own, you're just staking as part of a team. And so, from August 15th to August 30th, we built up that initial stake pool. And then, so people put in HEX, they minted one Maxi per one HEX deposited to the contract. And then on May 1st, the stake started. And like you said earlier, it was the 5th largest max length stake in history. And so, so that's what Maximus was. And it was actually mainly like, I was mainly motivated to build it when gas fees started getting out of hand, and I ended my first stake. And I was like, holy shit, this cost me $1,000 to end the stake. What? And then I went into the HEX crypto dev chat, and I was like asking about like, what impacts the gas price. And then I think Firebud said something like he showed a chart that showed like how the gas cost to end stake increases per day staked, because that's each additional day that you have to read over to calculate the interest. And then when there was that EIP 2929 that increased the opcode cost of using the S-load function, gobbledygook, it made calculating the interest 3 times as expensive. And so HEX, among other smart contracts, were drastically impacted by this increase in the cost per, that function, which it runs, on a max length stake, that S-load opcode is being called 5,555 times. And so the main driver in that gas cost suddenly increased by 3. So the HEX gas price for ending stake drastically increased, which on one hand is really bullish for the price because there's a lot of stakes that may not be feasible to end. So we may be seeing a lot of early end staking, or people that just can't afford the ETH to end their stake. They'll get more HEX by buying it on the market rather than ending their stake. And so, it's kind of like that supply is just kind of like recirculated into the next cohort of TShares. So that was the urgent thing, was when I realized how expensive it was to end gas, and that the whole no expectation culture from the beginning of HEX, which a lot of the new people don't really grasp because they weren't here for the no expectations of the AA. I actually carry that forth throughout everything in crypto. I don't expect Vitalik to lower gas fees. I only expect him to raise them. I don't expect anybody to do anything that's going to increase my performance. And so, even though I hope and I wish, and I think that there's a chance that the gas in 15 years may not be an issue. I think that it's better to go on the side of a worst case scenario in this, because you only benefit from it. And so that was what really urged me to start making Maximus. And that was the initial value proposition. It wasn't so much for the liquidity, but it was mainly to save on gas fees, because when, each person is ending their stake, the contract is calculating that same thing over the same number of days. So, every day there's about 30 max length stakes starting. And so every day there's 30 identical calculations that all cost a ton of gas. And so if we bundle those up into one, we get to pass those savings on to the user. So gas savings was the main driver in it. And so when gas fees started going up, combined with the S load started going up, that was when PulseChain started becoming a thing. So kind of like it was driven out of that. And I just kind of sat on the idea for a while because, one, I didn't know Solidity at the time. I'm a full stack Python and JavaScript developer, but not so much Solidity. I'd never done it before. But then when, so I just kind of sat on it because I'd heard that the Staker app people were working on some type of encapsulated stake thing. So I thought maybe that would solve it. But then I realized that their solution wasn't really for the gas, it was more for the liquidity. Then a friend of mine, him and I started trying to flesh out some ideas for how to make it work. Then we just kind of sat on it, goofed off, sat on Twitter, shit posting about HEX, it's just doing that stuff. And then one day I was like, all right, I'm just going to build this thing. Cause I was starting to explore some DAO platforms where you could easily launch DAOs. And I saw how there could be a smart contract that holds funds on behalf of the token holders. And there's a way to mint coins and redeem them. So I started exploring some different DAO platforms. Those ones would have required admin keys in order to operate it. That was a big no-no. It required a fair amount of trust for the minting and redemption, which, I wasn't, equipped to put forth onto people. So then I just decided to write the contract from scratch. And, to do that, I just wanted it to be simple as possible, which people ended up really loving. People love that there's not a lot to understand. It's one-to-one minting, tokens liquid. At the end, you can get your percent of the pie, and it's just kind of like that. And so yeah, I mean, that's kind of how Maximus came to be. We think it has a lot of benefits for the HEX economy, and then also just for the end user who chooses to participate.
Absolutely. I think, along the way in my crypto education and teaching, I've at times been mistaken to think that Ethereum 2.0 would reduce gas fees and save future hexagons from the horrors of having to calculate something later and later on that is going to be more and more expensive to calculate. And so, yeah, I mean, that's something that, a lot of us have learned, is that actually Ethereum 2.0 is not the main intervention to try to fix the fee problem. It may be a sharding solution that ends up really helping in that case, or maybe nothing, will help. And on this show, you know, we talk about game theory, we talk about incentives, and you know, that's a big mystery, at least to me, is why haven't the high fees been solved on Ethereum? And one reason I can think of is because it benefits the people who are in control for gas prices to be high so that the price of Ethereum can be used as a store of value. And so I see, like, despite what people say that, you know, supposedly the devs are trying to bring down gas fees, if anybody has a large enough stake in Ethereum, or they even have the ability to print more Ethereum, like the Ethereum Foundation does, I really just don't understand what the incentive is for them to lower the transaction fees, unless they have major competition or something. But up until now, it's they've, I don't think, had the right incentives.
Mm-hmm. Yeah, and it's a hard thing to do, right? Because it's like a supply and demand issue, and there's all types of other things to consider in like how you actually fill those blocks, how you know the blocks are confirmed, and so it's kind of hard to fix something while it's like shooting a rocket in the air and then trying to like switch out the engine for something else while it's flying. So I do think it is a challenge, and maybe the incentive also isn't there, you know, but also like I think that what I value in high gas fees is that to me it signals permanence, because if those block operators are getting paid, they're not going to stop operating those blocks. And if we're relying on that blockchain to persist for 15 years, you know, you kind of want there to be a positive, profitable business model for the people who are selling you those blocks. And so you just want your assets to outperform the impact of the fees. And so, you know, like hex price going up alone, that you know, solves most of the gas. Like if hex goes another 10,000x, gas probably is not an issue for any stake, you know, but you can't expect that. You know, you should expect it stays the same. Like that's, to me, that's my all baseline assumption, is that how they are today, everything will just stay the same. You know, that means daily payout per T-share, that means gas prices, that means hex price. Like my baseline, how I operate, you know, everything else is just gravy on the top. You know,
Yes.
so like, yeah,
I've heard you speak on that point, and I think it's absolutely outstanding that you're not, you know, doing moon math for people, and you're being very realistic, and then allowing people to just be educated on what the reality is today and what that looks like going forward. Certainly. And
yeah. I mean, it's that no expectations thing actually like deeply resonated with me across like my whole life. Like even, you know, personally, like I don't.
Yeah, relationships too. It works.
Yeah. You know, or strangers on the internet. Some people get very angry about what some guy on the internet says. And it's like, I have no expectation that a stranger is going to cater their speech to me, you know? So it's just like, you kind of, you know, you should just embrace everyone for just being in this moment with you. And so, you know, just that whole no expectation thing, you know, it applies all over, but it specifically to like the topic of, you know, like what the cost is to publish data to the blocks. You know, I only expect that to go up, but I also hope that I'm positioning my financial assets to outperform that. And so, you know, and then also doing things, you know, like where, you know, Maximus, you know, by pooling all into one, you know, we kind of joke, and, you know, it's half joking, but half not. It's like the Maxi people are literally pumping their chests on Twitter because, you know, we're experiencing a 55% premium to the underlying hex that was just minted 2 weeks ago. You know, think about how hard we'll be beating our chests when no one else can afford to end their max length stakes but us, because, you know, we did it all together. And so, you know, there is a little bit of truth to that, but, you know, that's really what the solution that we tried to deliver. And then by doing that, there include other benefits, you know, that may help with, you know, like those issues with the gas, because the gas, that's a big variable. Like it's hard to predict how that's going to play out. And then, you know, PulseChain in there, it's like the way I view this is, and the reason why, like, you know, rather than just like kind of like abandoning our hex on Ethereum, you know, we tried to build a solution. You know, we could have waited to just launch it only on PulseChain, but, you know, the gas fee value proposition, at least on face value, might be more important in ETH. But also, you know, like we want valuable hex on both chains. And So, we don't want to, like HEX is a powerhouse on Ethereum. It's like one of the top coins on Ethereum. And so, and then PulseChain is kind of like, I view PulseChain kind of like it's like a parallel universe where like the copy that is like bonded together via the PulseX liquidity pools. It's kind of like PulseChain's like an extension on Ethereum. And, because the copies of all the coins go equally to everybody, it's as if nobody got them. It's just like as if they all always existed. And so it's kind of like an extension, like parallel universe. And, if we really want to maximize our performance, like we want optimal performance on both. And so, while Maximus provides value on both, it for the gas use case, it may be more useful on Ethereum. But maybe the market utility use case is more valuable on PulseChain. And so that's just kind of what we'll see play out.
Yeah, I think it'll be really interesting to see how everything goes. And I agree with you that there's this, Hart's law is something that is just so foreign to even liquidity experts. I mean, because markets have been so manipulated by investment banks, by market makers, by the walled garden that is the SEC, and kind of all the political structures that we have. I think that it's going to be really exciting to see what happens in the free market, because this has never been done before. And I agree that having HEX valuable on both chains really will matter and make a difference, and just really help kind of, in some ways, I think, bridge the two chains, but also really make a statement that puts HEX at the center of what everybody, all the millions of users who are coming in, what they're going to be doing there and paying attention to.
Yeah, I totally agree. Because I think that like the advantage we have like in HEX is that like a lot of these other coins, which you see this whole thing with like Luna and UST, and like there's kind of like this like institutional class of like crypto funds that where they all invest in each other's like ecosystems, and it's kind of like the same faces, same big LPs,
the VCs,
big pools of finance.
Yep.
Like HEX is really kind of like a grassroots money, and so
yes.
It's not like it doesn't like rely on, and it's not subsidized by like this like kind of institutional class of investor. Like HEX is really backstopped by the individual users that have kind of come together and seen this value in this financial asset, and so it's a lot more resilient. And also I think like the diversity of just like the HEX user base, it's like very far and wide. You see all walks of life, completely differing worldviews, ideas, like opposite people, but like they all value this one asset. And so, but you compare that to other crypto communities that have, very limited, they're not diverse in opinion or appearance or anything at all. And, they're all like kind of the same demographic. And so like, they're like, I feel like what we have going on is just like a lot more resilient to change, and kind of like starting from like a grassroots movement. I think that's like a really strong position where maybe we didn't have like the initial like billions of dollars pouring in to like, create this thing, but we attracted, God, you showed his tweet, Godwill, we attracted that big buyer, and now, major holder, and then other large stakeholders that kind of like built up the mountain. And then, kind of like, all the individuals that are, kind of like, grabbing on to that, holding on, and, also, promoting it, doing the marketing efforts, like all voluntary, on a voluntary basis. And so I think that this is like a strong ground to stand on. And that's why, it works. It's funny that Maximus launches right at the time when like Luna and UST are kind of having their whole calamity, because it's like their whole thing is like backed by, who knows what. And, when price volatility happens, it causes calamity. Whereas like here we are with Maximus, like we're backed by, there's no guarantee on price peg. There's guarantee that, one HEX in will at least be one HEX out, but that's it. Like, you don't know what it's going to earn, and then, So it's just like, not having to like peg any type of price and being backed by this like really strong asset. I'm so happy, because like, we could have built all kinds of other wacky stuff, but just like keeping people with something that has like real strength and real product market fit, I think is a big competitive advantage.
I think you do, to some extent, to a limited extent, you do know what you earn because the market is trying to tell us that. And I do want to get into the weeds when it comes to it, and go all the way down the rabbit hole when it comes to what the premium is now on a Maxi versus a HEX, because I think it's a super important moment in HEX history and of course DeFi history to pick that apart. But, speaking more broadly, I know David and I talked at the end of our last show that we did on Tuesday about like how there's like one company, what was it? Digital assets or something that owns basically like almost everything in the crypto space.
Oh, those investment guys. Yeah. Yes. With that chart of all the stuff that they're invested in. And the shocking part about that was it was like 95% stuff you never heard of, which was shocking. It's all junk. But I do want to talk about the Maxi HEX premium. And I just want to congratulate you, Dipcatcher. I think you did a great job, man. It's already surpassed my wildest expectations so quickly, you could say. So, and I was one of the first proponents of Maximus once. And I got to say, man, your video where you read the audit and then you read the smart contract and you broke it all down and it was all there plain black and white. And I loved it. So I thought that was wonderful. And that gave me full confidence to talk about it and look into it. And, here we are.
Yeah. Thank you very much. Your support, at that time definitely helped, the morale and yeah, that's kind of, that's really what people in, HEX expect, right? Like it's a very tough crowd. It's not like these other shitcoiners and like NFT crowd would like, they want there to be like an admin key that can like, Dev, can you do something like that type of stuff? Like that's like opposite of what, our culture values. And so, it was like, I'm glad that you appreciated that, because that was definitely, most of the time leading up to launch was just like, kind of that type of stuff. So, yeah.
Hey, man, well done.
Thank you. But yeah, so I guess, Maddie, to answer your question, so I'm looking at the chart right now. So you can look at this too on the Maximus Cash site. There's or if you just go to Dex Screener, if you click, so just go to dexscreener.com and then just search Maxi. You'll see the Maxi HEX. Yep. So at the top, like you see like the thing that says like 1 hour, 4 hour. So go in there and like scroll all the way to the right. So like put your mouse like over the candlestick little icon, up. Yep. Now scroll. See where it says switch on the top right hand corner. You start to see switch right above the y-axis.
Here, I see where it says Dex Screener in the upper left. See those double arrows?
Now click. Yeah, you're on it now. Yep.
Like scrunch it.
Yeah. So, yeah.
What do you want me? Sorry.
So you've got it. That's the price in HEX.
Okay.
Yeah. So it's easier to look at on the candles. So if you like see that little candle thing like right above versus Maxi HEX on Uniswap, like switch to the candle view instead of the line view. So to the left, right there. Yep. Okay. Yeah. So that 1.5. So if you scroll, zoom out all the way just to see kind of the whole history, that like this has been kind of like Maxi's, how it's gone. What you can see is that during the minting and redemption phase, so between April 15th and April 30th, it pretty much hugged 1-to-1. It was only lower than 1-to-1 because it was mintable and redeemable at the same 1-to-1 rate. So it was like if anyone was to be buying on Uniswaps and it pushed the price up, someone with Maxi could have sold into it, got more HEX, and then reminted to get more Maxi. And so that like redemption, it was really like a HEX-backed stable coin.
And there were there were trade tards too who were minting Maxi and then selling it for less hex.
Yeah,
I literally
I
saw
had
those
no idea.
swaps.
I'm looking at that. I'm like, wow, you're just losing.
You're literally clicking the wrong buttons. I actually saw that during the Maxi minting phase, where people were buying and then selling for less than it cost them to mint. It was like, what are you doing? Like, what?
Yeah, I didn't understand either. And we thought about not including redemption. We thought about making it like irrevocable pledge, but we actually wanted the redemption to be there because the same redemption function that you could run in the first 15 days is the same redemption function that you run after the fact. So we actually wanted people to have a chance to be able to like test, confirm, to prove to themselves, if they're not comfortable like reading the contract and inferring anything from that, like at least like test that the minting and redemption works. And then
Great
so
idea.
that, they could have, tested that during that 15-day period before it was locked in. And so, so during the first 15 days, Maxi was just like a hex-backed stablecoin. It just kind of hung around there. And then, kind of right away, what I gather from watching this premium build is there's a couple things factoring in. One is just the people that missed out on minting. Maybe they're waiting for their Coinbase deposit to go to finish. And so, maybe that was like that first bump up was people that just missed the minting window. Now they want to buy. And the only Maxi that's really for sale is Maxi that is one just in the liquidity pool by, there's a large cohort of users who are providing liquidity looking for that fee generation opportunity. So you can only buy from that class of users or people who are just like, using the liquidity aspect of it, meaning they can sell at any time. And so, I don't, it's hard to really gauge exactly what percent of people are using it for liquidity and what percent of people are just using this instead of staking on their own. So where they're not really interested in selling even at a premium because they're holding till redemption. And so, there's actually a small pool of the Maxi that's actually for sale. Like if you look at that, it says pooled Maxi. What is that? 1 million Maxi for sale. So down at the bottom, so it says max, like pair Maxi, pooled hex. So there's 1 million Maxi in the pool for sale right now. So that's, then there's 294 million Maxi total. So that's like 0.3% of the total Maxi is for sale, meaning list it, like where there's a Maxi there that you can buy. It's at a price, you can buy it. And, there's certainly more Maxi that people would sell that maybe they're just sitting there. They're not in the pool. So maybe there's like, say 10 million Maxi that's like actively activated as a seller at this price. And so, there's really not that much for sale. So any FOMO buying can have a pretty big impact on it, especially because, when you look at if you just calculate what you expect the future earnings to be, like people are baking that in, they're baking in the hedgeron value. That's a whole wild card. What's that going to be? Because the Maxi stake also accumulates hedgeron along the way. And it's going to be one of the top outside of the stakes that were here since Big Payday, who are like, those are the big hedgeron holders. But, of kind of like that next class of large hedgeron holders, this Maxi stake is going to be like the largest one. And so, it has a big, right now at current prices of hedgeron, the hedgeron that it is set to earn. So like the minimum amount that it will earn, it's about $2.3 million of hedgeron. And so who knows what that price is going to be, especially, because over time, all these big sellers, because right now, our stake ends, there will not be a single, Genesis TShare that is still active towards the tail end of our stake. And so most of those large hedgeron holders by that time will have had their chance to sell. Maybe they're going to hold, maybe they forgot about it, maybe they didn't mint, whatever. So like by the end, who knows what the hedgeron price is going to be? Because that first wave of big accounts that got a bunch for free, they're going to, they will have had 15 years to have done something with it. And so by then, maybe there's not as much pressure on the hedgeron. So maybe people are factoring that in. There's also like really strong like brand commitment. People are really into just kind of like the Maximus community. And so, maybe that's something people are factoring in. And what's interesting is that like on my baseline estimate of like future earnings, like I assume the current daily payout per TShare is constant. And, because what that suggests is that the rate of the staker class grows at the same rate that the inflation rate does. So like that's saying that like the staker, like the onboarding of new stakers or like the restaking of existing stakers is going to grow at 3.69% per year, while the daily payout itself grows at 3.69% per year, just because, there's a larger total supply to be, allocating that over. And so, that to me, that's like a fair estimate. Like I expect, more staking, and and with the baseline growth of the daily payout. So, I think that using today's, 6.2 or whatever it is as like the your estimate, that's fair. And so with that would put the end redemption
6.2
value
HEX per TShare.
Yeah. And so that would put the end, redeemable value at something like 5.5 or 6 hex per Maxi. And so, maybe people are just like baking that in, where, with that like baseline estimate, some people, there are people with crazy moon math, like me and the crypto Sparbook guys, we were kind of, debating the topic because, their calculation is a little different than mine on like what that daily payout's going to be over time. And then if, because like on my website, hex.cash, I have a future earnings calculator on there. Like I use that as the default estimate is like current payout. But if you look at the stakehex.today future estimates, their default, shows something else. So everyone's kind of got their own little one. I'm definitely at the bottom. Even today I tweeted that, like, I posed the question, what happens if every single liquid hex suddenly staked max length? What does that do to daily payout? And that actually takes it down by like 90%, down to like 0.69, per TShare. And if that's the case, so there's like a minimum amount that you will earn. Like if you lock in your TShares, there's like some minimum where if everyone's staked, all liquid stake max length, all ending stakes also just immediately max length, there's like a minimum amount that your TShares will earn. And what's interesting enough is that right now it's actually at 1.56. And so maybe this premium that we're experiencing now is people baking in the minimum amount if every single liquid hex staked, which, probably not going to happen. But
but that is the base rate that is guaranteed. And so especially if people are having hex and they're wanting to trade that for something that does have the benefits of a community that's, like more concentrated and more fresher and all pumped up about, that I think we could go on listing for a while and probably will go over all the benefits of Maxi. And then we can talk also about the, the potential, trade-offs that will have as well. But I think that, that's really interesting math. In some of the very first Quanking episodes, I was hoping that Whales Only and some other people would, I was pointing that out, that there is even though it's a huge range, like there is like a way to calculate at least the minimum amount of hex that will actually be paid out, using that same formula that you're talking about, where you look at what is the maximum number of liquid hex right now and how many TShares could that buy. And then you can also do math by computing basically what the TShare rate is going to be if people are ending on time and that sort of thing. Because this is the first really asset that we have where we know with so much certainty what the future supply is going to be, because we can see when people are unlocking their coins and we can see how much people's coins are worth in hex terms in the future.
Yeah. And I think that's, it's like an important number to look at. I posted the Python script that I use to compute that. And it's literally like current liquid hex times, plus the bonus hex times or divided by share rate. And, that it's, there's some nuance to like, what happens to the stakes that are ending. And, so I kind of disregarded like the future stakes, but I just, under the assumption that they can only get, like that they will get more TShares. So that's actually kind of like a top, if like that assumption is that like every liquid hex stakes max length and every stake that ends on time and immediately max lengths it, so that like that was kind of the assumption. So it's, rough number, but still it's like, the daily payout per TShare could go down by 10 times. And, so it, but also, what if people don't stake, what I had some of my early videos in Hex, and also when gas prices started going up a lot, I was actually recommending people just not to stake, just hold liquid HEX. Like it's got enough momentum on its own where, you know, say maybe rather than, you know, staking your HEX and, you know, getting like, you know, at the time it was like 24%, like if you did a 1-year stake, if instead of that, you could just, you know, hold liquid and maybe you'll get a 2,400% pump that year that you can sell 10% into. And, you know, you know, you take on that extra risk, you know, that like performance risk that you're actually going to like nail that trade. But, you know, you don't pay the gas, you pay the gas for the swap, you know, which can be shockingly high, but, you know, you have that option, that liquidity option, you know, where you can attain that same, you know, extra HEX or you know, however you're measuring your financial performance, you can attain that without the staking, but you have to bear a little bit more risk. And so for some users, you know, that's worth it, you know, where, you know, the gaining like 24% on $100 when you're paying $50 in gas both ways. Maybe that's not the best thing, but, you know, maybe that $100 in that year, you know, how many percent did price go up last year? 2,400% or something. So like, you know, you can achieve that if you take on that extra risk, you know? And so, and that's kind of also the game with Maximus is that like, you know, I know for a fact there are a lot of people that are, you know, interested in kind of like the swing trading because, you know, like you were kind of getting at was that, you know, it's not always going to be premium. You know, it's not all just like blue sky. Like, you know, there's, even though the Maxi supply is really widely distributed, like if you look on Etherscan at that holders chart, it's like the most equal, just like gradual, you know, we have like our big players and then it just like, you know, it's like the most normally distributed thing ever. If you look at
you guys, we are 98 people away from having 5,555 holders. I need you to get on that right now. And
Maddie he told me this off the stream. He's going to give $1 million of HEX to the 5,555.
That is not true.
Maximus
that is not true, sir. But I can tell you that if, you know, the math that we're going over right now does not account for the OA, you know, I'm gonna go ahead and say it again that like, you know, this show, the topic and the part that I guess the reason why we like doing our Tuesday streams so much is because of the game theory. And I think that when it comes to the OA, that there's a major amount of game theory that a lot of people would take as extremely uncertain, that I would argue is much more certain than people realize because of the game theory that rules the OA, that the OA would not act against its own interest or against the interest of, you know, HEX as a product that needs to be adopted to become more valuable. Even if like I take, you know, kind of a slight tangent and talk about like, you know, how Ethereum is failing with these gas fees because they're repelling new users, and how much more valuable would they be if they had a mechanism by which to capture the store of value without interfering with their own, you know, incentive structure to be able to bring a low cost to trading. Right now, Ethereum is being held hostage, you know, by the people who are using it as a store of value. Vitalik probably doesn't have the right incentives to cause trades to be cheap because he realizes that people have already put their life savings into ETH and are using it as a store of value, if that makes sense. And so, you know, if he sold off, you know, $100 million worth of his coins, he could fix the problem today. He could fix the high fee problem today by making ETH so affordable, but he won't do it. And it's this, you know, that's part of the problem, is that he won't do it because it's not a clear benefit to the world when everybody's bought in. But with HEX and PulseChain and Maximus and all the things that people are building, I think that there is a way to capture that store of value use case, which is most valuable. But how valuable is it if you aren't onboarding everybody in the world? And, you know, people are ready to not be under the control of fiat, but they need something better than Ethereum.
Yeah, and that's why we're really excited, and that was why we were rushing to get the whole minting on Maxi done before the we didn't know when it was going to happen. People thought we had some insight into it. I'm like, no way. Like, what do I know? I know what you know. And so,
your math, your math that lines up perfectly with the current ratio. Now, does that take into account the OA is holding a large supply of liquid HEX and is unlikely to stake it?
So do you mean like that minimum value, like how the price is similar? So I don't really think, I mean, maybe like deep within the market's soul, it knows that there's like a divine like gravity that's like bringing it there. But the main driver of this premium, there's actually like one person who was very dead set on being the number one holder, who their market purchases were really like, they were like, when you look at the big candles, that's like one guy. Who was pretty dead set on reaching like 10 million.
You tweeted about this, right?
Yeah, I probably tweeted about like how there's, and you can kind of, what I like to do on the like on that deck screener chart, like I'm looking at it right now, like just, it lets you filter like the size. So if you like, just like filter by like $100,000 transactions, you can actually, there's, most of the transactions above $100,000 are actually sell orders, but it's just met with like, so much buying that it's like really kind of cancel that out. Most of the sellers are in loss. They're bearing the opportunity cost of just holding the Maxi. But you can kind of like, toggle the, you can toggle that and see, who the big buyers are. And that, and it's kind of the case in everything. Like the main drivers of the price are the very large holders who are making a material impact on the balance of Maxi and HEX in the liquidity pool. And so, there's like a handful of big buyers who, so that I wouldn't say that they're like saying, oh, this is a fair price because of this. I'd say like,
are you kidding me? Really? You think that they're just doing passion plays and they're not just like super smart people with their money because they have so much money?
Well, so I think a lot of money. They're more factoring in future earnings instead of like calculating what that baseline value is. I don't think that's like what makes, a 50% premium right now attractive. I think that like the large people, they're tolerating a premium because one, maybe they just have intention just to like, use it for the staking, or two, maybe they have intention to sell at an even higher premium later on, when the redemption value is up at like maybe 4 HEX, and maybe there's some crazy market activity that's driving a further premium, and maybe just some like deranged buyers just like hitting the green button and just sending the price to the moon. Like maybe they're expecting like a higher premium, kind of like in the bond market, people are willing to buy negative interest rate bonds because they expect the negative interest rate to be even more negative in the future. So it's like that, but the opposite. It's like they're willing to, pay a premium on this asset to the current value. If you consider, like what's the, it kind of raises another question, like what is the baseline to determine your premium or discount from? Is it the treasury value that's minted today? Is it the future earning? Is it somewhere in between? And so depending on what you call your baseline, maybe, what they're doing is they're like pricing in like a year and a half of yield. And so they're like, so like that's kind of what that suggests, is that like, they're pricing in that, the Maximus treasury is going to earn 50%, because it's earning about 31% at current daily payout. It's like 31% per annum. So, that 50% is like, 1.5 years. So it's kind of like they're pricing in that future earning. And they're tolerant, of that because, who knows what type of awesome, fun thing could happen that could just like irrationally, send the price to the moon, or there's also risk that it could dump to all hell, but like there's speculation here, and like there's momentum here. And so I think that like these big buyers, they're tolerant of this premium, because to me that means that they're saying that like, okay, this premium is going to be higher later. And so maybe that's what we're seeing,
So there's at least there's the 10% bigger pays better bonus that would account for some of the premium. Is that right?
So I would classify that as about 3% because the longer pays better is 200%. And so that 10% over the, 100% of your base, that's your principal, that 100% plus
Okay.
the 200% bonus, that effective hex, like on GoToHex, there's that 200. So like the total like virtual hex in there combined with your principal is 300. And then there's the 10%. So that 10% over that 300 total, it actually, like the bigger pays better actually had only a 3% impact on the earnings. So it's 10% more earnings per hex, but that's being overshadowed by the 200% extra earnings per hex. And so like the total net, impact of that bigger pays better, it's actually closer to 3%. Like the actual earnings that we get from those TShares, it only accounts for like 3%.
Like the effective bonus. Yeah, I understand. Yeah, I gotcha.
Yeah. So like I don't think that like 10%, maybe that's why, in the first couple of days it like jumped right to 10% because a lot of people kind of like they think and internalize 10%, even though it's actually 3%, but they kind of like, okay, 10%, that's bigger pays better bonus,
But
fair.
aren't you getting
Even if they
10%
didn't
more
do the math right.
TShares or no?
What'd you say?
Aren't you getting it? I think, isn't
yeah.
there like a perspective of like whether you're bringing more hex to the table or whether you have a set number of hex and then like you're just deciding like, so for example, if you had taken the same number of hex and you had split it into like 10 million hex stakes, which of course you'd never want to do that, but like if you had done that, you would have gotten 10% less TShares going for the same length. Is that right or wrong?
No, well, so
if
I
you
don't think
broke
it'd
the
be
same number
10%
of
less.
hex into smaller stakes that would not get any big, really like any significant bigger pays better, wouldn't the bigger pays better still be giving you 10% more TShares? Or is that?
So it's like 10% more TShares per like your principal, but then there's also the longer pays better, which just kind of dwarfs it, which like even no matter how small it is,
Yeah,
it's
yeah,
still
yeah. The 300% basically.
yeah. So I from how I kind of view the math, like it's really like a between 0 and 3% like effective bonus. It's like just like how the phrasing of like that bonus is, I think might be a little confusing. But yeah, like we would have had about 3% less earning capacity than how it is now.
Well, and I don't know if you ever came across the data that I presented when I was doing TShare app and showing how basically like showing up what the price difference is between doing a 10 and 15-year stake if you accounted for the fact that TShares don't just have they don't just have like a number, but they have an age. And so like each of your TShares, you want, when you're trying to capture compound interest, you want to get the end of the curve. That's where it's the most profitable. And so just how that hex, go.hex.com/stake interface front end is set up, really, I think leaves it for the user to have that as an Easter egg that basically, if you had to teach it to yourself using only that official front end, I know a lot of people who didn't understand it at first because it makes it look like you're not getting any benefit for staking longer than 10 years. And I think we have a lot of on-chain evidence that shows that a lot of people staked for 10 years because they didn't realize that they could have really laddered all the way up to 15 and gotten a much better, T-share price based on all the assumptions of the system. So yeah, so I think that there are different ways to interpret. And even if, the three of us actually remember before T-shares were even priced the way that they are, originally, I don't think it was how many hex per T-share you could get and that sort of thing. Wasn't the front end based on something else?
That was short-lived. I think the modern, what of like the price per T-share, that was always there. Like how many T-shares you were going to get based on how much you typed in and the length that it sort of calculated it. It did get improved, but
yeah.
I can't remember what it was like at first. I think it would have been more intuitive to, rather than describing it as a bonus, it should have been describing it as a T-share discount.
Yes.
Because what you effectively got, with our stake, we maxed out the two of them. And so the longer pays better because it's like 2 to 1, so like 200 plus your 100% from your principal, it's like 66% discount. And then the 10%, which is kind of really just like 3%, it puts it closer to 70. So it's like, the Maximus stake got a 70% discount on the TShares. And then like kind of what you were talking about with like, it's really about how long those TShares are active, because, you could do a 1-day stake and get one TShare that earns you yield on 1 day for 21,000 HEX, or you could do a 10-year or a 15-year stake and have 7,000 HEX, but that T-share serves you for 5,555 days. So like the number that I call it share days remaining, and share days was actually the original name I was going to go with before Gold Key kind of helped with like the branding, because like that's really what this was like meant to be. And like the original idea was like a revolving stake where you could always be minting and always contributing to it, and the accounting and the appraisal was based on the share days that you're contributing and the share days remaining in the treasury. And so like that because that's very important, because it's not just about like how many T-shares you get, it's how many T-shares you get, and how long they're active. And so because like right now, like when the Maximus stake started, they got 233 million share days, the T-shares times days. And so compare that to some of these really big stakes, like there's all these whales that do these like short-term revolving stake strategies. They get like thousands of T-shares, but they're active for 30 days. Those T-shares aren't quite the same.
I think I've seen some of those on StakeRap. If you stake $1 million of HEX for 30 days, I think you get like 10 grand.
Yeah, it's 1%.
Yeah,
and because like the APY on that is like just under 12 right now. So yeah, like that, that's like a a big
that's a shark
class
move.
of user that like they're those share so it's kind of hard to equate them to to these ones. And so yeah, I mean that's share.
So
Yeah, you
like,
share a year. Yeah, maybe years is a little bit more tolerable to think about, because mine's like 233 million, whereas share years is like nice, easy to say numbers.
Yeah, so I made this last summer, and it talks about like, basically I'll just read for the people who are listening audio only. It shows like 3 different stake length choices in years, and it shows a 5, 10, and 15-year stake. And what was a kind of a made up metric that we made for people to be able to visualize how much more valuable a 15-year stake is versus a 10-year stake was to come up with T-share points, which is it's a calculation of based on $50. And this was to create a front end that is still like very usable today and is able to onboard people very automatically into HEX. Is this idea that $50 worth, like, but no matter how many dollars you put in, it's still going to be this number of points is the difference between what your how valuable your T-share is going to be in HEX terms. And so it's, and the developer Future Us that many of you know, who helped make TShare.app, he and I were both obsessed with, just like you are, Dipcatcher, with what are we sure of, and not all this moon math, because the moon math can be done on top of whatever we're trying to teach people. But this is these numbers are guaranteed based on longer pays better. And so it says metrics matter. 15-year stake pays better when measured in T-share years, but not when measured in T-share count. And it says when you're onboarding, really, if you look only at the front end, this was back when $50 equaled 650 HEX, and that would buy you in a 5-year stake 0.07 T-shares. and 0.1 TShares at 10 years and 0.1 TShares at 15 years. So if you stopped there, you would be stuck thinking that 10 years was just as good as 15. But if you look in terms of TShare years, you're seeing that you're seeing a 0.35 versus 1 and 1.5 for how long, as well as how big your number of TShares is going to be. And so using TShare points instead of TShare count fraction to address unit bias and gamify minimum hex buy of $50 on MetaMask. And I did a post on Medium for that. So anyway, that's
I
think one way to break it
down. Highly relevant, and that's really important knowledge for people to to understand, because it all, like, and this is kind of where I think Maxi kind of plays. Like, this all is like related to just the general concept of establishing a valuation for your stake. And what what we're because I've kind of thought about this before, Maxi, but now there's a chart and it's all real. It's like we get to see in real time how the market is evaluating a maxed out stake. It's like, what are the things that are driving the price up, and then what are the risks that are driving the price down? And so, like, we get to see that in real time, how that changes over time. Because right now it's like there's maximum uncertainty over what it's going to earn, because we have the stake's been live for 15 days, so we have 5,540 days remaining. And so there's a lot of blue sky you can paint into that. But in 14 years from now, it's like we'll know how much it had earned till that time. There's only 365 days left, and that it takes a lot to really move that daily payout number. Like, it's like the sum of months or years of activity that's like really moving it. And so
don't tell that to HEX 19.
Well, what?
I said don't tell that to HEX 19, the whale that got hacked and gave us.
He's really into Maxi. He's one of the first people. He was the first person to put 1 million hex into Maxi.
Well, and I'm somewhat joking too, because even that doesn't really change on as broad of a scale as you're talking. Doesn't change the average, but that was
on those days, that was big, and that was that kind of well, I'll come back to the HEX 19 thing, but yeah, like the there's at that time there will be more certainty, and like whenever there's uncertainty, that means that there's volatility, and then that volatility attracts that means opportunity. You can buy low, sell high, and then the opportunity is what attracts liquidity. And like liquidity, even though like the gas fee savings is like a big like driver in why it was created, something that a lot of the users are interested is in that liquidity aspect. And so like I think that like early on, because there's so much uncertainty, that's been really healthy for driving an active market. Because I'm looking at now 1.6 million of trading volume in the last 24 hours. That's like purely organic. $1.3 million liquidity pool. I didn't post any liquidity. Like it's not like it was like a coordinated team effort for that. It's just like organically came to be. And so and I think that's because there's so much uncertainty in like what that future value is going to be. And so that, because that like kind of that cycle of uncertainty brings volatility brings opportunity brings liquidity. Like I think that like because there's so much uncertainty, it's really bolstering that liquidity value proposition. And then it's and it's just people there's other things outside of just like the hex and hedger and underlying value that people may be pricing in. What if again, like literally this is just ideas, zero expectations, nothing. Like what if somebody in the Maximus community decided to launch something new, and in order to participate in that thing you had to buy Maxi, and maybe that and to sacrifice the Maxi for that thing, and maybe part of their sacrifice rules is, okay, we're going to burn some of this Maxi that was sacrificed. And then suddenly, because when you burn it, you reduce the number that the redemption rate's calculated by, you can like suddenly if you burnt a lot of Maxi, you could suddenly just crank up the redemption per Maxi. So like what if someone in the community organize that, and so like there's other random things that could happen. Or what if there's an airdrop only given to Maxi holders? That kind of interacts, like because of security reasons, and like to maintain no admin keys, and like no funny business. Our contract does not support open-ended contract calling. Like we can't just like, see a new airdrop and like, oh, like let's go claim it. Cause it's not like a wallet that someone uses. It's like however the contract is coded is how that address operates. And so, we cannot get unknown airdrops. We were able to get Hedron because they launched before we did. And it was easy to integrate, but so we are not able to claim future airdrops, which some people really like. And maybe that's something that's like, maybe if we were able to, maybe the price would be a little higher, and that's just kind of how that works.
As a premier airdrop connoisseur, I would simply correct that by saying that, if somebody wanted to include Maximus users, just like if they wanted to include Staker app users and that sort, like we've already seen Pulse Dogecoin cut out people who were using Hedron tradable stakes because they had a certain philosophy against tradable stakes. Whereas, other people, they might be more interested in getting the more passionate group of people. And so, if you wanted to airdrop to all hexagons who are staked, plus include the set of Maximus users, you could go on chain and you could find which addresses at least did the initial action. There's some record to go off of, even though you might have to process that data a little bit more. It would probably be worth it to hit all of the groups, not just smaller groups. So, but it really depends what the product market fit is of what's being airdropped and, what the value proposition, what the tokenomics are of it. But I can imagine that people would airdrop and would specifically include Maximus holders if they would, by other criteria, not be included, and maybe start to try to include people who did a PulseChain sacrifice, PulseX sacrifice, to give different rates to different people. Could be possible to because we saw that with Pulse Dogecoin that seems to be still pretty valuable in terms of a lot of people who have stakes, not just the whales like Hedron, but a lot of people who have stakes that are smaller. They bought in at much lower prices. So for example, I have onboards and I put in $100 for them, and the amount of Pulse Dogecoin that they can claim is more than the initial investment. There are people out there in the Hex community who are, have put in more than $100 into Hex, and some of them will now, because of airdrops, no longer have to even sell their interest. They'll be able to live off of the airdrop income from Hedron, from Pulse Dogecoin, and from all the other things that come along in the future. And so I wouldn't count out your users totally from something, because the people who even know more about what they're doing, and as people learn from each other in the airdrop world, I think that would be an important group to include, or at least I hope it is, even though I'm not one of the Genesis Maxi wallets. I think that it is still a potential airdrop play, but I also think that like the other dynamic that I guess we haven't specifically talked about for the Maxi premium is that you got a 4x Hedron bonus that will now live for the duration of the stake. And I know that you pointed out how valuable that'll be at the end of the cycle when Hedron is suddenly becoming much more rare over time, because people's stakes will on average age out at 6 years, or whatever the average is, 6.3 or whatever. And then Hedron will become more rare. Until then, it'll probably, I don't know what the OA sell wall is doing, like where exactly that is, but I think that just in terms of adding more value, people can't get a 4x Hedron bonus anymore. And we saw Hedron pump like 20-30% today at times. And so I think that could also help to explain part of the premium. What do you think?
Yeah, definitely. Like that's kind of like the wild card. Like if this was the original thing, like before Hedron, honestly, it probably would have been pretty boring. Like, because it's like the Hex one, like you can make reasonable estimations of what that earnings can be. The Hedron thing, because it's like the Hedron price, like who knows what that's going to be. And so it's like definitely a big wild card. And I think because we included it, I think people are excited about that because, you know, Hedron really like, it seemed like, I mean, I know there have been other things that, you know, have kind of come around, but like, it seemed like the first project that really like sparked people's curiosity about kind of like what can be done. Like, you know, like, cause there's kind of two parts to it. There's like the, you know, like the HSI stakes where, you know, you can stake and then borrow against it. But to me, the really novel thing is that just like all the stakes just naturally, you know, accumulate their own hedron. And so it's kind of like a perpetual, like extra, you know, source of income to that stake. And so that I thought was really, really unique. And, you know, who doesn't love free money? I mean, everyone, you know, it's like you give someone free money, it's like they're going to love it, you know? And then, you know, they're I think, you know, early on, you know, maybe some people, you know, whatever their opinions are on, you know, kind of like the, you know, the philosophy of, you know, should you be able to sell your stake? You know, that's kind of like a whole other thing. But, you know, so it's kind of like, you know, those things. But I think it really sparked people's imagination. And I think, you know, Alex is like, you know, he's an inspiring, you know, very smart person. And, you know, so people were, you know, kind of craving for that, like, you know, thing to like intellectually stimulate them. And, you know, there's like a new thing to speculate on, got a bunch of it for free. And so, you know, I think that Hedron launching right before we did, it kind of primed people to be thinking about, you know, like, you know, what can be done with HEX? Like, how can the financial utility of HEX be amplified? And so the timing of it was really awesome because, like, you know, they faced a lot of the hard questions and, like, you know, a lot of the like debate and, you know, because whenever something new happens, it's like there's that initial reaction, you know, where people, you know, they put up their walls and they have to kind of break them down before they're comfortable. It's like, because Hedron has that part of like the encapsulated stakes, even though the mechanism is entirely different and there's completely different trade-offs to how we did the like liquid stakes versus how they did, it just kind of like prepared people to think about it. And then when Maximus came about, it was like they were already ready to like understand this topic. And so just, you know, the timing of it really worked. So you know, we love Hedron, like truly, like we love Hedron. And like, you know, we took special care to ensure that we could get Hedron. When I was first building the contract, they didn't have Hedron built in. I almost didn't do it. It was almost, you know, kind of like how with the airdrops, you know, like the way I view it, you know, because like you said, I hope people do include us in airdrops. Like by all means, it'd be very easy to do. But the like with the Hedron, my initial like strategy was like, okay, like, you know, I don't think we can include Hedron. That will be our gift to all the Hedron holders, is that we won't mint it. So we're not selling. Like, you know, everyone has other stakes. They're getting Hedron. And if you really want your Hedron, you just buy some. And, you know, no one, you know, we have no, you know, you can even sell your Maxi to buy whatever airdrop you missed out on. And, you know, we don't care. And so, like, you know, we love Hedron, and we're really glad that it was included, because at first, like, it wasn't going to be included. But the timing was just perfect, and just seeing how people really liked it, and then, you know, it was easy enough to add, and I think it definitely provides like an extra layer of value, and, you know, and that's, you know, maybe we're seeing that play out in the price right now.
Yeah, I think so. I think that there's definitely future value being captured there in a number of ways that we've discussed. Here's just, while we were on the subject, I just want to show this again really quick. This is a illustration of how, I know it's really hard to see on the screen here, but this is an illustration of like two different methods for valuing future TShares, basically. And it gives the example of taking the perspective of how many TShares you have in terms of TShare count versus what you have in terms of TShare years. And again, this is relevant to Maxi because Maxi is the largest, you know, longest trustless stake that everybody's entered into together for the longer duration. And I think that really, if people know how valuable that is, and, you know, then are only cashing in, you know, basically people aren't trying to trade it, is probably the healthiest way to go, is to like just hold it long term and see what it does. Here, you know, if somebody starts out and makes, this is if, basically this is, it's been like a year since I made this, but basically these are two examples of people who are making the same exact stakes, but one person is valuing across time. As the time goes on, they're valuing their TShares based on count versus based on age and count combined. And so the person who starts off and makes a stake in year one and maybe even has 5 different stakes. So that's what the columns are here, is all the different stakes. You know, basically the person would have 5 different stakes. And here they would be going for like 10, 11, 12, 13, and 14 years. And you can see that the first stake in the ladder, it like ends at year 10. And then, you know, then there's an 11-year, 12-year, 13-year, and 14-year step. And the person who's valuing based on T-share count would, at year 1, say that they have 100 T-shares in this example. And then in year 9, they would also think that they have 100 T-shares. And then they would start to see that number decline because their first stake, column A, you know, it aged out. And so even though they'd be able to rebuy those T-shares, maybe if they earned enough interest, you know, and everybody else wasn't staking max length at that point, you know, it would if they're valuing their wealth in T-shares, which we know is one way to look at the system, even in year 9, they would think that they still have 100 T-shares, which is what they started with. But in reality, if we look at T-shares and their duration combined, the person who starts off with the same stakes would say that they have, you know, in this example, 1,200 T-share years to begin with. They have the same number of T-shares. It's like 5 stakes that are the same duration, 10 to 14 years, and 20 T-shares, but they're multiplying T-shares by the number of years that those T-shares will exist at that rate. And so on year 1, they would say that they have 1,200 T-share years. And then each year they can see that the number of T-share years that they have is going down in a linear fashion from 1,200 to 1,100 to 1,000 to 900. And it's a much more smoother like distribution. We can see in the graphs here. It's basically like a representation of what that looks like is either it drops off really fast during the time when everybody else's compound interest is taking off versus looking at it going down over time. And the reason why we thought that this was so important to explain to the HEX community is because all of you people who have a staking ladder, you might not realize and be able to see how, you know, basically somebody could feel like they're rich with all their T-shares, but they aren't accounting for every day the number of money printers that they really have is going down as that T-share rate ticks up and as time passes. And so this data taken together, you know, it would lead a staker to maybe consider trying to preserve their HEX gains and preserve their money printers and not to want to sell all their principal all at once and be, you know, kind of out of the game.
Yeah, what I really like about how you lay that out is that it can inspire a sense of urgency to replenish those those share years, because, you know, every day it's like you're losing. It's, you know, and so I think that's like a good, you know, and that it took me, you know, many months to kind of really internalize that for myself, you know, like trying to figure out the T-shares and all that. And yeah, because that, you know, that's like the key driver here. You know, that's like, you know, the Maxi stake has 42,104 T-shares, and, you know, so across 5,555 days, that's 233 million. You know, share. I call them share days. I should go by share years now, because that just makes so much more sense. So that divided by 12 is, you know, kind of what that like max capacity is. And, and then it goes down. And so, that like, I saw someone in the comments asking, like what could bring the Maxi premium down? Because right now it's like almost busting through all-time highs. We've seen just in the moments we've been talking, it's been oscillating between like 59 and 51%. Like it's been going crazy right now. But so like, there may be a time where, depending on how your perspective is, where like, it is better to wait or, maybe stake on your own, because you could get those same number of share days for less HEX. So that's like kind of a calculation that people, so that's like one of the many things to consider in evaluating it is, like what is the opportunity cost to buying at this price versus staking on my own, for the same duration. And so, there's definitely, like that what someone in the comments asked, like, what could bring the price down? It's just like, if that force, like exceeds, if that downwards force exceeds like the upwards momentum caused by other reasons people are buying, and other ways that people are assessing it and like balancing, the future earnings versus the risk. And, it's all like things, because like when people ask me like what's making the price go up, it's like, it's truly the sum of everything. It's how every person who's participating, and even how the people that aren't participating, like by not participating, you're still participating because you're not buying, which is just as important as someone buying in terms of how the market is arriving at that, that value. And so, there's, so many things that factor into it. There's the, future earnings, that's like, something that, bakes in a premium. There's also, the risk of not getting the airdrops, or, there's, even though like the contract was audited and it's, very simple and it, and it's really, it's the most of the actual like stuff that the blockchain does in our contract was actually the HEX stuff. Just our contract pretty much is called the HEX function. And, so, but there is, that contract risk, and, there's risk that maybe at the time that you need liquidity, maybe there's not a buyer that day. Maybe there's a big discount that time, so like, people thinking that like the discount's getting out of hand, those maybe like, the premium reaches some point that it activates a whole new cohort of sellers. And now there's like a lot more active supply, people, predicting that risk, like that can push the price down, people selling their Maxi to go do, what other shitcoin might launch that people will want to sell their Maxi for, or maybe there's an airdrop that we can't collect ourselves. So people sell their Maxi to buy that airdrop. People could be, maybe some, Maxi whale gets tired of some like, noob Maxi guy who's just being cringe on Twitter and just wants to like dump the price to get them to shut up. Like maybe, there's like, irrational or like, non-market related reasons why people may be selling. And, so like all those things are what could kind of, push the price down, and then those things are, just met with like the things that push it up. And then, that's kind of what we'll see play out over time. But really like, the only thing that matters is the number of buyers and sellers in that moment, because that's like what the price that'll be painted on the chart. And then, because like you're certain that there's going to be a redemption, but like until then, all types of things can happen. So, like on our website, we depict like a chart of like kind of like a premium and discount cycle where like as the, like the measurable HEX goes up, you might see like times of premium, times of discount, kind of what you see on that grayscale one. Over time, I've actually thought that like that initial chart may not be fully accurate. And I haven't even published what I think it is, because one, I actually want to see if what I think the chart is going to look like actually ends up being what it is. And I don't want to like cause like a self-fulfilling prophecy. I mean, even I don't even think that like what I think about is going to, the market's going to do what the market does. But, this is just to depict it. I don't necessarily think that's what it will look like, but what we're really trying to capture here is that like earlier in the stake, that spread between like the premium and discount relative to the treasury value, it could be very large early on, but then over time, it could become very small. And so that was like really what we were trying to depict here, is that like that premium discount, like, we may not see such wild, I mean, even it's, again, like I don't even really know how to assess like is this a discount of future earnings, or is this a massive premium to what was just minted 2 weeks ago? So like I'm still trying to figure out what my baseline is for like even like, measuring a premium.
Yeah, like how much is speculation versus actual value that can be justified through computation, through maths.
Yeah, yeah, because we know what it earned today, and with very high certainty we know what it's going to earn tomorrow, and then with like pretty high certainty we know what it's going to earn in a month. With pretty good certainty we're know what it'll earn in 5 months. So like, do you include like the months in the future that you have a good idea that it's going to be around 6 hex per T-share? So like, do you include those months? And maybe that's what this like year maybe the being at right now 59% premium, maybe that's the market saying that we're certain that over the next year and a half, I guess now it's at 60, so it's really at baking in like 2 years of yield. So maybe what that's suggesting is that the market thinks that the next 2 years of daily payout per T-share is going to be pretty predictable in the range that we're in now. And maybe that's like what it is. And maybe that's like how we know that the market, like how certain the market is of like that future earnings. Maybe it's certain that over that period of time. So like that's a bit, maybe right now is like the fair market. Maybe there's no premium or discount at all. Maybe this is just like, the hex that you're pretty certain that it's going to be backed by, and then it'll get updated as time goes on.
You saw some examples of arbitrage during your minting phase, in which it wasn't just the ones that David was calling out, who he termed trade tards, who are pressing the wrong buttons, trying to do arbitrage, thinking to themselves that they're getting free money for nothing in a cool new way, which like there are cool new ways, but maybe not that one. And you all could actually do the math and show that they were pressing the wrong buttons. But beyond that, I think I heard a stream where you had said that there were something like 3 million hex worth of trades maybe to arbitrage, and you were looking at some indicator like to infer that the redemptions whenever it was at a discount or something.
Yeah. So I never went like in detail on like, like tracking the arbitrage trades. Kind of how I inferred that was I looked at the number of hex that were, or like the number that were pledged, which was, I think like 296 million. And then I looked at the number of redemptions, which was like 3 million. And so like, because the end value is like 294 million, that meant that, there was, 2 million of those redeemed hex were just were reminted. And so, it just how it kind of canceled out. So there was like an excess of like hex that did go in, but then was redeemed. And so maybe I haven't done the math on like, does that difference account for like, because there were some big dips on that, like, from the our beginner traders, the people that didn't execute well on the trade, who were experiencing like a putting in 1 hex, getting 1 Maxi, and then selling that Maxi for 0.9 hex. Maybe that I'd have to like really do some analysis to like
you know what though, and I accidentally did that one day during the adoption amplifier. I thought I was going to be so slick, and I don't remember what I did, even that I was selling on one of these early exchanges and then giving to the adoption amplifier. But what I forgot to do was to put myself as the referrer. So I did not self-refer, so I wrecked myself. I lost like 20%.
It's funny how much that can add up now. But yeah, I mean, that's and all that stuff kind of factors in. And
but if we look at what are some of the other arbitrage like opportunities, I would say one would be for people who actually do have a solid foundation for what the minimum like appreciation would be and what price would absolutely be justified. I think there's probably enough interest that at this point in the, as Maxi stands today, where it relates to the community and where it has community awareness, I think that the idea of it trading at a discount would be less and less likely over time, unless it were to like, unless people were to stop talking about it. But people are incentivized to talk about it because they might use that as their liquidity mechanism. Of course, if they have other stakes that are don't basically have the counterparty risk of yourself, you know, you can sell your Maxi whenever you want, versus other shares that you stake on MetaMask are not transferable, right? So that'd be one kind of like, I guess, arbitrage I would see is if it did dip below the rate that it was worth, or that somebody could infer that it was worth at that point, without valuing in like any moon math or any like, future appreciation. I think if there is some sentiment that like the OA is never going to stake the hex that it has liquid, and you redo the math that you did, thinking about that, I think that you might get a higher number there of what it should be worth is might be a little bit more than it is now. But the problem is, or maybe it's not a problem. I think the other way to arbitrage this situation is for somebody else to make another Maximus contract to basically copy the idea. Well, maybe we could talk about that for a while and discuss like the pros and cons of that type of a situation.
Mm-hmm. Yeah, I mean, having another pool, maybe it might dilute from, like a current premium, because now you could, maybe get another chance to like mint at that initial rate. It makes the hex more scarce and it puts buy pressure on hex. And so, that increases like our, USD value of our treasury. Maybe it dilutes some of our earnings, but maybe it's made up for from that. But also maybe there's opportunity to provide liquidity for the two pairs, because they'll probably, there probably isn't going to be strong trending if there's like two identical stake pools. Perhaps the prices really remain kind of together, and then if there's that, maybe that like makes it a more profitable thing to provide liquidity for. All types of things, because all this stuff absolutely could happen. This stake is just like anyone staking on their own. Like someone starting another pool is just the equivalent as Godwill staking, right? Like, except they can't sell their interest in it, but it's just like, a pooled stake is, from the stakes perspective, is just like any other stake. So it, dilutes the payouts just how anyone else does. The liquidity piece, may present those opportunities where if like one is in a big discount and you're measuring it based on like, how many share years are accounted for per each, redemption token. Maybe you see like times where that goes out of balance due to like one pair having like a big active seller while the other pair doesn't. And so, there may be those times where you can like, shift into one to the other to kind of close that gap. But because like, the arbitrage, I don't even really know if it's would be considered, like arbitrage, because it's not like, because like there's arbitrage during the redemption phase, because there's like minting and redemption. Right now it's like it would just kind of be buying a dip, even though like you're getting a discount, so like, and then you're gonna to redeem in the future. So maybe like whenever there are dips, that attracts that class of user who's into it more for it's going to attract the speculative people who want to like swing trade the discounts and premiums, but it's also going to attract people that are just looking for the best way to get the share day exposure. They want to lock in the most shares per day. And so maybe like a dip in the price is going to be that opportunity for them. And so, that's probably how that might play out. But yeah, who knows what's going to happen in the future? I
think having anytime that there's an active mint phase from someone who's reputable, I think that would help control any bubbles that are created where people are going in, to speculate. If the liquidity gets really low, for example, or something like that on Maxi, it could pump harder just because people are getting in and out of it. It could, but then, would have to kind of theoretically come back down to whatever people are able to value it at in times of more certainty, right? Or as our understanding of the system develops, because I mean, right now, we don't, it sounds like, have like a definitive price. Like we're saying, this is exactly what it should be worth. I mean, I applaud your math of looking at, all the liquid HEX out there and really what that would do to the daily payout. I think that's probably the closest thing. But then again, it's like, how do people value the OA coins that are liquid, and do they see that as part of the evidence? Because if we, another part of the math that can be done here to compute the actual rational value of Maximus, if you will, I think would be if you looked at when people's stakes end, basically, like, even if they restaked 100%, how many fewer TShares would there be in the system? That's something that we can know. And I think that it helps us to understand what the upper limit of TShares are. And that is probably important for these types of calculations, is to say, all right, in 7 years from now, we know that there's a certain TShare rate that's going to exist because of basically the first half of the distribution of stakes, is going to have come out by then. If the average for the entire system is 6.2 years, then in 6.2 years, we will have half the people having to rebuy the TShare rate. And we can calculate for each individual stake in that system, we can calculate how much it would push up the TShare rate. Is that correct?
Yeah. So like the TShare rate is mainly driven by the largest stake that ends each day. Like if you look at the Kodiak, he made this API that has the GraphQL one where you can query the like stakes that actually move the share, because every stake could move the share rate, and many stakes do. But the it's like a lot of the big stakes, they move it, but like the amount that they move it, it's like they like step it up, but like a single long stake would like step it up that much, and then all the ones that happen in between, they're moving it up. But whether or not those big short stakes happened, the largest stake each day is going to move it up the most to like the maximum that it would have been. And so like that's what I look at is like, those day one, to maybe day 1 to day 5. I think that would like cover just about all day. I mean, there are going to be days with gaps where, nothing in that first week is ending stake, but those are the main drivers. And so when I like want to estimate what that TShare payout's going to, or what the TShare rate's going to be, I'll just like look on Hex.Vision and look at like a big old stake that's ending like whenever I want it, to look at. And then I'll, calculate how much it's earned from big payday, from earnings plus principal. Then I try to estimate what it's going to earn in the meantime. And then I know that with all of that HEX that they get, if they staked an equal number of days, they will get roughly an equal number of TShares. So they have to stake longer to get more TShares. And so like that's how I know kind of roughly what it will get updated to. I haven't done any like rigorous, like, like scripts on, they'll actually tell us that, but that's kind of my like back of the envelope. It's like, I'll try to estimate how much they're earning.
And this whole Maximus Dao might incentivize somebody to do that calculation and then share it to make a floor price in how you can value in HEX terms what a Maxi token should be worth. Because again, to go back to this concept that I believe you can calculate what the lowest value the TShare rate should be going up into the future, based on all the stakes that exist in the system, that there's a minimum that you could actually know, and then it might go up higher if people act a little bit differently than you would expect. But there's how the HEX contract is written. I think that there is some certainty that can be be derived from. And let me know if I'm wrong on that.
No, I think because it's like to calculate it exactly is like kind of tough because there's the penalties
but you
factor
could
in
calculate the minimum that.
you can definitely calculate like a minimum that it would be, and maybe Maxi will be it's kind of both, it's like do you calculate what those T-shares are going to be, or do you kind of look at the Maxi price and will the Maxi price like reveal that kind of naturally, or like will there be like deviation, and what will that tell us? But
that's a great question, and that's exciting to see.
Yeah. But what else?
And so so the premium, is it's paying off for people now, probably, but again, I think we'll need to revisit this issue in the future because because I think people out there will go and do the math and maybe let other people know if they're valuing their wealth in Maxi and that sort of thing. I was gonna do a plug real quick to say that Dipcatcher has agreed to speak at the PulseConference.online that I'm organizing that'll be coming up here. So thank you for agreeing to speak. Since I did the first online HEX conference and then we made that into an annual thing, I suspect, speaking of predicting behavior into the future, I suspect that I might do a PulseChain conference every year, just like I've been doing with HEX. And, it just so happens, like I did the math here, and the day that the stake comes out for Maxi falls exactly within the 3 days that would be the days that we'd be doing the conference in 2037, right? So the dates for the HEX conference has been exactly the same. January 6th through 9th is the online conference. Every year we did that because of Joe Hexotic's sobriety date and a number of other reasons. But so the 14th through the 16th of July is that's the 1 year anniversary of when the first sacrifice for PulseChain occurred. So that's the dates that I picked for the PulseChain conference this year. So I guess what I'm asking is, are you willing to speak at the PulseConference.online in 2037 as well?
So if it is co-located with the Maximus end stake party at the Coliseum.
That's right.
Okay, so
awesome. Yeah.
Maybe there'll be some, maybe we can, combine budgets there and get, we could rent out the Coliseum where we'll be having our thing, and maybe that could be the conference location as well.
I would love that.
We're hoping that, when PulseChain, because we haven't really even touched on the like kind of cross chain aspect of Maxi, with like Maxi. Yeah, so like we're that was like a huge part of like why we made Maxi so simple, and just like we cut features, we stayed really focused on what the core value proposition was, because we wanted there, even though there would have been no difference in its operation had we like launched and had minting go on, and then where the fork date was midway through minting, or if like we had to launch two separate independently on Ethereum and PulseChain if we only could launch after. But because we finished the minting before what we think, I don't think that the fork snapshot has happened yet. So the PulseChain, the number of PulseChain, or the number of Maxi on ETH is going to equal the number of Maxi on Pulse. And the benefit of that, it's purely vanity. There would have been no difference in its operation had those varied. But what the benefit of having the supply be at parity with one another, just like the HEX supply is at parity at the start, as it stakes, like it's going to change. But having that like start be equal on both, it will actually give us a way to directly see how the market is evaluating liquid HEX, which is EHEX, PHEX across the chains, versus how the market is valuing max length stake HEX from one chain to the other, because they're two different things. So we'll get to see like what the the EHEX PHEX ratio is versus what the Emaxi PMaxi ratio is, because they're, the supplies of each start is 1-to-1, will, any deviation, of the EHEX PHEX ratio to the Emaxi PMaxi ratio, that is the market telling us like how it is valuing the differences between the two chains as they relate to staked hex. So maybe because, the kind of consensus view is that the gas is going to be less of an issue on PulseChain, maybe we see less of a premium on the PulseChain one, because that's a big value proposition on the ETH side. Maybe it's not so big of a value proposition on the Pulse side. So maybe there will be less demand for PulseChain based Maxi. But on the other hand, because there's also the big liquidity benefit of Maxi, because it can be traded, you can be a liquidity provider and earn yield in a liquid fashion. Maybe because there's like this Pulse X thing, and maybe we get Pulse, or maybe we get PMaxi, Emaxi pair as an incentivized pair in Pulse X. Maybe there's like added demand for the liquidity benefit, but not so much added demand for the gas savings. So maybe that kind of cancels it out. But seeing that, like, there will be two numbers you can look at, that EHEX PHEX ratio and that Emaxi PMaxi ratio. And from that, you can get a lot of information about how the market is, evaluating staked versus liquid hex, which I think is gonna be really important for, people to kind of, be able to use that in the things that they're, factoring in, like what the value of these things are going to be in the future. And so that was like the big rush, we just wanted pure 1-to-1 parity of supply for both EHEX PHEX and Emaxi PMaxi. And that's what I'm most excited to see play out.
I think having that equal supply on both sides, I think, and considering the community and the underlying asset, I think that is really sweet to have that. And it, so it should, just like you said, give us a real indication of how people are valuing their staked hex between the two chains, and hopefully accounting for the difference in gas fees. What other predictions do you have for how Maxi can be used?
Yeah, so what I'm really hoping for is that somebody cracks like the lending aspect, where you can, either lend out your Maxi. Maybe there's a hater that you want, someone's talking shit on Twitter, and you're like, all right, short hex. You can short hex by shorting Maxi. So maybe you can earn some yield if you want to hold Maxi till the end, and you're fine with lending it to someone, and you don't care what the price happens. So you're providing Maxi that's going to be shorted, and you don't care because it's still your Maxi, and you think the collateral is sufficient. Maybe that's an opportunity to earn extra yield on your Maxi, is by lending it to a shit talker on Twitter to short it. Or maybe, kind of in the same way, you can use your Maxi as collateral. Say you think that the value of the Maxi is going to go up. You don't want to sell your Maxi, but you need cash today. You can post your Maxi as collateral, borrow against it. And then, because Maxi is backed by like a steadily growing treasury of hex, perhaps that's a really strong form of collateral, because maybe the extra, the earnings over the duration of your loan, maybe that can, in a way pay off your loan for you. And so maybe that can make your interest rate that you're experiencing feel more favorable than like the interest rate you'd be experiencing if you were just like posting your Bitcoin or your ETH as collateral. So, I think that Maxi could be a really strong collateral coin. So as far as, I've tried out some of the like Aave and Compound on ETH. The gas sucks. Like, it's like you can't make small payments. You can't take small loans. It's like big loans or nothing. So maybe it, like PulseChain, will unlock like a kind of more consumer lending use case, which I truly think that I mean, Hex is kind of different, but like I think one of the main like consumer, other than saving, the savings is probably number one. Like, and that's why Hex is so strong, because it's like a very strong personal savings product. But I think the other killer use case in crypto is credit, like that crypto-backed credit. I think that's a big deal, because crypto is a really strong form of collateral, because it's instantly liquid. The cost of storage is nothing. You can prove who's in possession. It's very hard to rehypothecate crypto collateral, because where are the coins? Not going to lend you unless you deliver the coins. And so in general, because crypto is like digital property, it does make for really good collateral compared to like your home. Like it's, like how do you appraise that? There's cost of storing it, or any, you take something to the pawn shop, you're paying a fee for storage, and like how do you
There's
appraise it?
middlemen involved. Because even with certain smart contracts, you can do borrowing and lending trustlessly. You don't even know the other person on the other end. You're just interacting with a smart contract, right? So
yeah. And so like the crypto backed credit, I think, is a huge application. And HEX on its own is good for that. Staked HEX, like, even like an application could be where, like a lender could just like take your HEX as collateral and then put it in a staking ladder and then like you have some agreement of like maybe the lender and the borrower are going to like split some of the yield, and then so like you can get a lower effective interest rate on the borrower's perspective, and then from the lender's perspective they're actually earning a higher interest rate. And so like maybe there's like some things that you can do there. But like, so HEX on its own is good collateral, but then Maxi, because it captures the exposure to the staked HEX and that yield, but it's also liquid at all times. Maybe Maxi is a good interface for interacting with some of these credit protocols for HEX. And so that could be a big, if a ton of people are borrowing against their Maxi, that's otherwise, they could have otherwise been selling to generate that cash. But on the flip side, if the value of the collateral goes down, then maybe, that could cause a lot of selling because people getting liquidated and the lender needing to cover the loan. So, there's certainly risk involved in that, but definitely the credit stuff that's a big one to me. And then, that's probably like the big use case of PulseChain that I'm really hoping to, the low fees unlocks for like kind of like the consumer retail use case is that like crypto backed credit. But what else? Yeah, I get that. I guess that's the only thing I can think of that like I'm like really hoping to see soon on PulseChain.
So Cabana Crypto should call up Cody Willard in his pitiful Toyota.
Oh,
who
jeez.
Screamed against Richard in his castle. And this is the guy who said that he would be willing to take a short on HEX. Is there a product? So will we have to wait 14 more days to, use some copy of Aave on, I don't know Aave, but like use a copy of Aave on PulseChain to really let him get the best fee situation possible? Or
yeah, I mean, I don't know.
Fiat.io PH, isn't that their thing?
Yeah, I know and I thought the LL team was also doing something. I don't know, but
cool.
Yeah. So I don't really know the state of the art of like what's coming out, and I don't know if any of the existing just ETH stuff is just going to copy over, because a lot of these lending protocols, there's a lot of admin keys. They have the proprietary front ends where like you need their API key to use the contracts. So like that'll be the big test of like what's real trustless decentralized DeFi is what actually gets copied over, because there may be these like lending markets that are on Ethereum. The contracts get copied over, but the people that operate them aren't going to extend support to PulseChain. And so, ideally there, and I really haven't looked too deeply into ones. Like I've looked into how to get something listed on Aave. It's like you got to get like a DAO proposal through, which like the VCs that created Aave, like they control what goes on there, because like nobody even has enough Aave to even put forth a proposal. So like, and you're not going to be able to buy that much Aave to do that. So, I think it's harder to get listed on some of those ones. I don't know if there's any trustless ones or like kind of like ad hoc ones where, there's not, but, maybe I should sit down for a couple of weeks and think about, how to make like make a lending protocol that's like, doesn't rely on like a price oracle and doesn't rely on liquidations, where instead of like liquidating it, the lender just gets to like repossess some portion of it. And so, where then it's like, you're not, because that's where a lot of these like lending protocols fail, is in the oracles that set the price, and people like use flash loans to play with the oracles, and then they end up just like wiping out liquidations, or they putz with the interest rate and they're able to do some magic and somehow just extract millions of dollars from the lending market. So, I to me, an ideal lending situation would be where the lender, so say, you post your Maxi as collateral, and then I lend you USDC, and then that Maxi sits there, and then over time, or maybe there is a price oracle, but it's not related to like liquidations that like automatically trigger. But maybe if you lend your dollars and then the price goes below the collateral limit that's like agreed upon, then the lender now takes possession some of that Maxi. And then what that turns into is just like, it's like as if the lender just bought the dip from the borrower, because they gave them dollars and then they got Maxi and at the rate where the price was. So it's like, it's almost like you're like pre-buying from somebody, but it's like you give them that advance, and then if the price goes below, then you get to take possession of the Maxi. But if they pay you back, then they get to reclaim the collateral. So I think something like that, maybe that would be a thing to build, kind of like related to it, because that's like the one thing that kind of, like when you see a lot of these like on Richard's thread of all the things that go wrong, probably like a third of them are related to lending. And so there's risk in like kind of like auto liquidations and like relying on oracles for that. But if you can like remove the liquidation piece from it and just make it like where it's more of like a repossession, where like the lender is now in possession of the Maxi, but there's no like automated selling to like repay the lender, where the lender has to bear that risk that like they're going to repossess something that continues to go down in price, which maybe they can tolerate. So I think there are different ways we could approach lending, but I've done no like serious work towards any topic related to that. Is just like how I've used some of these like lending things like Nexo, not really to, like, so I have, like like some of my HEX, was bought with, borrowing against the Bitcoin that I had free claimed with, so that, and,
wow.
and then as
strategy.
Because at that time, the Bitcoin, I think with the Bitcoin price at launch was like 7,000. And so, we saw the Bitcoin price go up to 70,000. So during that time, the value of the collateral was going up, and the value of the thing that I bought with it was going up. And so that's like the best case scenarios where like the thing you post as collateral and the thing you bought with the borrowed funds both go up. So like you can use it for that like investment use case, but also I've like made personal purchases with like Bitcoin or ETH backed credit. And so there's definitely some magic there. So that's like my experience with it. And also just like, it's the same it's same with like how Kraken offers margin. They don't offer margin to people with less than $10 million anymore, but they used to offer margin to all accounts. And so, this was back before HEX, but like like the origination of dip catcher was related to this algorithm that I built that like tells you when it's like a dip in the Bitcoin price. And then whenever it hit that threshold, I would enter like a ladder of like small 5x long positions. And then if price would go up, rather than settling the loan by like closing the position, which means you sell the Bitcoin to repay the loan, they actually allowed you to deposit new collateral and pay and settle the loan. And then you could just lock in the Bitcoin at the price that your position opened up at. And so, it gives you flexibility where it's almost like a 30-day down payment. You can you put down 20%, that like 5-to-1 leverage. That's like you put a 20% down payment, and then you can like, you can pay that loan off. And so I was using that as like a buying mechanism for leading, like just for personally stacking sats way back when that was the thing to do. So like there's a lot of use cases to the like crypto backed credit. And I'm hoping a lot of that gets unlocked, because we haven't seen really any HEX related credit, whether from the borrowing side or the shorting side yet. It's not on any exchanges that offer margin. It's not on any of the like crypto lending like Aave, Compound, Cream, whatever. If Cream's even still around, like it's not on any of those. So like we haven't actually seen that use case unlocked yet with HEX. And so maybe with PulseChain we will.
And I think, to it's really interesting to see, how their tax advantages supposedly of borrowing and how the ultra wealthy, what they do to not pay taxes, which you can decide whether this is like way more moral for you or less moral for you. But these ultra wealthy people are buying real estate. They're buying up all the real estate. Then they're borrowing, they're taking loans against that collateral. And that's what they're using to pay their living expenses, to pay for all the things that they want to buy. They're using credit, and then somehow that doesn't count as income. And so, of course, they're able to get even more, if they have income generating, or if they're pumping up their own housing market and that kind of thing, then, then they're putting themselves in a situation where it's really hard for them to get liquidated or squeezed or anything like that. Because the market's fixed, because they're in bed with the bankers who are making the rates and deciding who gets loans and that type of thing for houses. And then, they're also not having to pay taxes because supposedly they don't have income. But it's, if you ignored like the entire bizarre financialization of the whole situation, you would see them like spending money on things and you'd be like, well, isn't that income? But if that's a loophole that does apply to taxes, then I think that's something that, that Liquid Loans is trying to capitalize on for its users on PulseChain. But then in this case, I think, doing it on the HEX side of things makes a lot of sense. Doing it with Maxi maybe makes a lot of sense, because what higher APY are you going to get other than doing, exactly what you did? So that becomes really good collateral compared to Liquid HEX or compared to staked HEX that somebody would have to, even if you did it in a like a Gnosis wallet, so you could transfer it without like having counterparty risk or thinking that the person kept a copy of their stake. It's really, I think it'd be really interesting to almost like, I guess, take into consideration that HEX is designed to really like pump and dump. Like it's, well, not pump and dump, but basically to have like wild, price volatility is a feature, not a bug. And so that is part that doesn't lend itself to the whole collateralization process without getting liquidated. Although if you had an asset where you took like, 50% Maxi and 50% Richard Hart's new stable coin, and you put those together, now you're cutting your downside risk maybe in half. And you just have, it would be really cool to see a network where you can't over collateralize to the point where you would get liquidated, like to the same extent that other people will just, they're going to be greedy and they're going to try to let people do whatever they want, to have like, have it where people can't really take much more than, 110% or something like that, of collateral, I think would protect people more, especially if it was in a basket of something that's more stable than HEX and is designed to be more stable than HEX. But I think that would be a really interesting thing to borrow against in the HEX world.
Yeah, it's definitely like, because the whole, like, I saw someone in the comments, they said lending systems sound like going back to the old financial system. To me, burr on cryptocurrency. I disagree with that. Like, lending is a critical part of monetary markets. It's like how the market is assessing the future value of money. You're like putting a price on the money. And that's like a critical function in an economy, is like, what's the value of the money today and what's the value of the money in the future? And that's like what the interest rate implies.
Well,
so,
in a debt-based, fiat-based system, right?
Yeah.
We don't have hard money anymore. We have fiat, which is itself credit and debt, right? So
and that's what's so scary about like seeing, you saw them popping up in Europe, and like you saw them popping up in some like corporate bonds, but there were the negative interest rates. And what that suggests is that the future is worth less than the present. And so that's like a really negative, like that's a dark outlook on the world, is that like the future is going to be worse than today. And so like
that the future money is going to be diluted more, I think, is another reason that you would see a negative interest rate, which I mean is historic. Like economists never thought that would be possible, and you're right. Like it exists.
Mm-hmm. Yeah, and the main reason why it's like kind of like works is because the people who are buying and selling like the securitized bundles of these negative interest rate loans, like they don't care what like whether it's positive or negative. They care, is it going to be net higher or net lower than like in the future? And so like they're like, so it, and it ends up kind of working, like, and for the user, if you get a negative interest rate mortgage, like you're feeling good because it's like every payment you make, you have to pay a little.
They don't sell those, of course. You can't get a negative interest rate mortgage.
There were negative interest rate mortgages in like Norway, and like there were some European countries that people were, it may have been partially subsidized. It may have been partially subsidized as like a home investment incentive, like where they're trying to drive their housing market or drive property taxes or something. But yeah, I was reading these articles about like these negative interest rate loans, and like the borrowers were thrilled, and then the lenders were like, is this okay? Like what could go wrong here? And so, but I do think that like appraising the like future value of the money is important. And I think that like lending and borrowing is like a really like that's like a critical role in like developing an economy, because maybe somebody who doesn't have the money today can produce a business that produces some great value, and like if they're not able to easily sell equity and kind of like their ownership of that business, and like they need credit, but maybe they believe in the wrong things, and the person who issues the magic credit number says, no, you can't get a loan here. Like there needs to be like a fully like judgment free, purely collateral based credit system. And that's what crypto can enable, because it's like such a like just like because of what makes crypto, it's like a very strong form of collateral. So like I think that it is massively important. And even HEX on its own is kind of like, in a way, like I think people have described it before as kind of like a virtual lending, where like you as a staker, you are lending your HEX to the liquid holders, but they're not, it's not like how you would otherwise, where they're not in possession of it, but they're just guaranteeing that you're not going to front run them if they want to sell. Like, so you're lending your HEX to them so it can just like sit in a little cubby, so that they are confident that you're not going to like go and compete with them as a seller. And so they pay you in the 3.69% annual dilution that they experience as a liquid HEX holder that gets paid to the stakers. And that's like a really fair deal. And so it's kind of like it already kind of exists in HEX, but it's not like you're able to like borrow the HEX or like actually borrow it and use it, or like borrow against it and use it. But it already kind of exists like that.
Yeah, I think that's really interesting. Well, the other point I was going to make about I guess lending, when I really tried to learn everything I could from Jesse in the liquid loans interview that I did really early on this channel, I was part of how I was conceptualizing the whole process is somewhat similar to a limit order, because basically, even if you get liquidated, the amount of money that you got would basically be a certain, it wouldn't leave you with zero.
Mm-hmm. Yeah, because you still got the cash and it's still in your possession, and you only got liquidated because you didn't pay. So like, unless you spent it already, but it's like you sold it in the dip though. That's like the worst, and so like, you want to be like, in one of my old videos, I kind of talk about that, like kind of like that borrowing and lending, or the borrowing strategy, where like it kind of gives you options. Cause like when that dip catcher algorithm's going off, I don't know if I need to like redo my subscription to turn on the email alerts on like the HEX dips. But like, when that dip alert's going off, the two best options for you are either to borrow against your, collateral. The best time to borrow is when the price of the collateral is low, because then it lowers your liquidation price. You can borrow less, but like your liquidation price goes down. So like when price goes down, you want to borrow, but then when price is up, you either want to repay the loan or just like hold on to cash. But when price is low, you can either borrow or buy more collateral. So it's like, whether, so like every month, if you want to like tend to your loan, it's like, you can just like, base it on, if the price is low, I'm going to either buy more or I'm going to borrow more. If price is high, I'm going to pay off, or I'm just going to save this cash and just wait for the price to be low again. And so it kind of gives you options that, give you more flexibility. And then like the worst case scenario is, you get liquidated, and like you would have been better off just selling your collateral instead of borrowing against it in that case, and you get taxed. So it's like kind of double whammy there, but that's like really the worst that can happen. And, maybe, and it's all known in advance. And so, that's like for everyone to price in like how much they're willing to risk to that. But yeah.
Interesting. Yeah, that it seems like you're very knowledgeable about that and you've thought through it. So that's really cool. David, have you played around with any lending stuff or have any like thoughts on the matter?
No, I have not. I've never used a lending platform. I'm going to look into it. You mentioned fiat.io earlier, which is supposed to be a PulseChain, fork of Aave. I think the creators hit me up on Telegram, and I did think I promised him I would take a look at it and try it on a test net. So I am going to give that a crack and see what I think about it. It's got potential. It definitely does. For me personally, like as a crypto investor and as a Hexican, it doesn't interest me now, but I could definitely see that later on, once I'm looking to, take some profits to change my lifestyle, then I could see that coming in handy. So I don't have to sell my underlying assets and I can keep ownership of my coins. That I do see the value in that. So I am excited for what happens next. We'll see, but I'm cautious though. I don't want to get liquidated. It scares the crap out of me. So we'll see what happens in the future.
It'd be cool if somebody could airdrop us tokens that we like can't sell because they aren't worth anything unless we like loan them, and then magically they're worth a lot, and then we don't have to worry about the risk or something. That'd be somebody should do that. Get on that. But no expectation of the work of others, of course. And so now I have to grill you guys because you're both holders of Maxi and I'm not, right? I'm feeling a little bit left out. So, how much is somebody like me going to have to pay to get somebody like you guys to give up your Maxi? How high can this premium really go?
That's a good question. I mean, the premium has, like, just looking at the Maxi versus Hex chart, right? That first 14 days, you're seeing trade tards wicket down. You're seeing mistakes happen, strange action, right? It's like bleeding down, which was disconcerting actually for me in the beginning, because I minted on the first day, like right after it went live, obviously, because that's how I roll. I was FOMO in as soon as it goes live. So so I did that. But now I'm shocked. My jaw is like dropped. When I look at this chart here of Maxi versus Hex, I'm like, what? We're up 60% in like 2 weeks. Are you kidding me? Every day it's just I wake up, it's just higher, higher, higher. I did not see that coming. I'm shocked. It's great. I mean, it's great. It blew my wildest expectations away. I didn't see this coming for a long shot. I was expecting like a 10% up and down wiggle. Personally, this is just my own speculation. There's no reason for this. This is just my own imagining the chart. I was expecting a nice little pump, and then I was expecting it to go under the cost of a Hex, and that's when you buy, and then it goes up and you sell a little bit, and you just kind of keep averaging your way up. That was the plan. And yeah, I mean, what the hell is that, dude? We're up 60% versus a Hex. Shocking. Didn't see it coming.
Yeah, I mean, I'm regretting not early end staking, nuking my big payday, because by now, like big payday for like these stakes ending in the next, like, 1 to 2 years, it's in that sweet spot where, more than halfway done. And, you really just give up that big, like, I think for that stage, it's like 40%. I'm like, oh, like, I'll just wait. But who knows, maybe it will. And, but right in this moment, it feels like, because, it blew my expectation away too. Like, but also like, I actually had a really hard time trying to predict what was going to happen. Like in general, I actually have a really hard time doing that. Like the top performing things that I've experienced in crypto at the start, I did not even expect it at all. Like, and so it's actually like, I don't know what it is. Like I actually have a really hard time, like calculating what the upside is. And, I, from the start, I guess I didn't really have much expectation. I thought that once it became liquid that like, I thought maybe that like underlying hex price may have influenced stuff, but yeah, I mean, but when I really kind of like, when I poke around to see who are people buying, it's like, oh, like these are people that, have a bunch of hex, and it's like, it feels early enough. I heard people saying in the chat, like, oh, this stake just started, and like people like FOMOing in. So like, I expected there to be some FOMO. But I would have expected
Not like this,
more
though, right?
sellers to be activated, but I guess what that speaks to is that, people, maybe that means that they expect the premium to go higher, or just like a lot of them, they're really just waiting for the redemption. Like they're not really, they feel good about it being up, but like maybe they're not, maybe they fear that if they sell now, the premiums, like the people that sold into like the 20% premium, like 20%, that's like a nice round number. Those sellers.
That was a great candle. I'm not gonna lie, man. I participated in that 20. Once it hit 20, I was like, all right, we're gonna take a little off the top here. Like, we're gonna,
Yeah, because now you're like, okay, when's the 20% discount? Like I'm gonna make that 40% spread. Like
I want it to come back to 90%, and then I want to buy. Yeah, exactly.
Yeah, and then like, I would be curious to see how many people sold in that first little pump
From May
between like
4th
the
to the
3rd and
7th.
Yeah, and like,
And then it went down, and then
where are they now? Are they in there bidding? Like, is a lot of the liquidity that like was sold, is it just staying there waiting for it to come back? And because that liquidity pool, and this is something that like kind of related. Yesterday, generally, like what I've been really thankful for, and what I feel really fortunate of, is that like in general there was almost unanimous support. Either people were neutral about Maxi, or people were into the idea. And there wasn't much. I experienced way less pushback than I expected. I expected to be like the town enemy. Like I thought people were going to be really pissed about it. But there was really not much pushback at all. Like there was generally good support. But yesterday, for some reason, I think it was because just like the hex price was going down while the Maxi price was going up, people were blaming Maxi buyers for pushing the hex price down.
I saw that.
Which actually, like all the criticism, and it really kind of forced me to think from their perspective, and actually made me, it helped me better understand like how the liquidity pools work. Like someone swapping Maxi, like they have liquid hex right now in their hand, them swapping it for Maxi, that has nothing to do with the hex USD pool. The only thing that matters is if someone that has Maxi in their hand then takes that hex and then sells that hex. And so someone going into Maxi doesn't push that down, because now that hex that was in their hand that could have been sold for USDC in that moment, now that hex in their hand is now in the liquidity pool as bid support for the Maxi. And so, like it's going in there. That means it's that hex is not being sold for USDC. Only when somebody either removes liquidity and then sells that hex, or they sell their Maxi to get hex and then they sell that, only then does it put that down. And if that was the case, that like, all the Maxi buyers were somehow pushing the hex price down, you wouldn't have seen the Maxi price going up measured in hex, and you wouldn't have seen that pooled hex value that it shows there also creeping up. You would see that going down, because people would be removing that hex and then selling it. And so, you know, some people, I think they thought that a premium is when Maxi would be diluting from hex buy pressure, but it's actually the opposite. It's during a discount. When we see like if we ever see a Maximus discount, you'll be able to get more hex exposure by buying Maxi instead of buying hex. And so in that case, it removes buying pressure. But during a premium, it really just incentivizes people to instead just buy and hold hex, because, like, you know, on your hex on hex exposure, you're getting less. Sure, there's other things that are factored into the price of Maxi, but like if you're only looking at like on a per hex basis, the premium in Maxi is actually bullish for the hex price. The discount will be the other hand. So I wonder what type of, you know, people are going to come out the woodworks angry at us during our first bear market. Maybe they're going to be adding all, you know, like throwing salt in our wounds. You know, all the Maxi holders are going to come off like this like peak euphoria of this like crazy premium, and then like maybe a big discount season happens and like everyone's just like, you know, saying cringe stuff, fighting with each other, like just angry. And then on top of that, like we're pulling buy demand away from hex, and all the hex people are mad at us too. Like, you know, maybe those will be like a dark winter in Maxi.
The Maxi bear market next year.
Like a discount combined with bear market and hex, like, you know, because like, you know, you can buy more hex by just buying Maxi, and by, you know, buying Maxi, you're not necessarily pushing the hex price up. It's only the USD. It's like the USD going in and out of the hex USD liquidity pool. That's what's driving the hex price. The Maxi is just, you know, like it's just like it's because like right now the only pool is Maxi hex, and so the hex in the Maxi liquidity pool, it's like that's liquid hex. It, you know, it could be sold at any moment. And I personally have no, like, I will never shame a seller. Like if anyone wants to sell for any reason, like totally there, like I would never shame a seller, like, you know, because I don't believe that I should control what someone else does with their keys. And so, like, you know, I would never shame a seller. You know, a lot of people do shame sellers. You know, so like, even if there's like a lot of selling on Maxi into hex, it only translates into negative price pressure on hex if the hex that the Maxi person cashed out is then sold. And so that was something I, you know, kind of really dove into yesterday to really understand kind of how like it works. And so I'm hoping people kind of get some clarity on that like, you know, the people buying Maxi with their hex, if the hex that they swap
this chart
stays there, it's just as if the liquid hex is being held anyways.
Yeah, like the chart we're looking at on screen, like when those candles happen and people are swapping Maxi to hex, that doesn't affect the hex price in US dollar terms. You know, hex is still whatever it costs in USD. So yeah, totally.
Because of the liquidity, because otherwise, if there was a different liquidity setup, then the automated market makers would route around hex and not use it as where the actual, you know, like buy pressure gets applied. So we can see that, you know, if you ever really go deep into what is Etherscan really showing when you're doing swaps between different coins, you know, we recently saw in the past, 2 or 3 months, where Hedron had started out having its primary liquidity with USDC. And then based on Richard explaining to everybody what the implications were of that on a Twitter Spaces and maybe on a YouTube as well, you know, it became clear that it would be much better for both projects that have so much overlap in their holdings. It'd be much better to have the primary pair be hex. And so we saw that switch. And so you can actually see when you did trades with Hedron before and after that liquidity event happening, that it, you know, it stopped basically routing, because before it was routing, if you sold hex for Hedron, then it was routing through USDC, and it was putting the buy pressure on USDC more than it was for hex, you know, in a way. And so I think I mean, would you guys agree with that analysis?
Yeah. Like how it is now, like we'll probably should, like, because I don't think there's a USDC pool, and someone may set it up. Like truly, we had nothing to do with the pools at all. Like I clicked deploy on the contract, And I did trigger the stake to start, but anyone else could have. I just wanted to make sure it's because there's a chance that someone could have messed up and just cost themselves gas. So I just wanted to like just get it done right, because I had a script that was there's a tool from Open Zeppelin that lets you trigger contract calls and like pre-authorize transaction. And so I had like set up a script, and I was live on stream watching my script run, and like everyone was like shocked that I was surprised that the stake worked. And I'm like, I wasn't surprised that the stake worked. I was surprised that my script worked. And so I did cause the stake to start, but anyone could have. So like, really like I pressed deploy and that's it. Like I have nothing to do with the pool at all. And, it's like purely organic, and, it's really built like that. That's, I guess, what far exceeded my expectation was the size of this liquidity pool. So soon. And, so maybe someone will create a USDC pool. Maybe like the timing, like,
but that would hurt HEX.
So it
is
would
what I was.
Well, so, but it's not the presence of that pool that's hurting HEX. It's people cashing out entirely that's hurting both Maxi and HEX, because regardless of how it's routed, it's like right now, it's like, even though the pool is in there's the HEX Maxi pool, and then there's the HEX USD pool, the HEX USDC pool. It's like someone who on Uniswap is selecting sell Maxi for USDC, it routes through those two. And maybe if there was a direct pool, it could be there directly. And so, regardless, it's like the thing that's hurting it is people cashing out. But like, even if it like might dilute, any type of buy pressure, it's like the HEX that were converted into Maxi, those could have just been sold from the start anyways. And like the HEX that's in the liquidity pool of the Maxi HEX pair, that HEX could just be sold anyway. So it's like, whether or not Maxi exists, there's still that HEX that could be sold. And whether that person had previously held Maxi and then sold from there or not, like, it's like they had to get the Maxi somehow. They either had to mint it or they had to buy it. And with the HEX that they used to mint or buy, they could have just sold anyways. That's their choice. And so like, even if it's Maxi people selling, it's like they had to have first got that Maxi somehow, and they likely started with HEX. And so, maybe it's good they delayed their selling, or maybe you want them to sell faster. It's all based on what you want, and kind of, where you're at in your strategy. So, like I think in general, like it's good that there is a Maxi HEX pool for people to speculate on, because I think that if people are going to have the itch to trade, it's probably better that they trade a pair that at least has some type of like center of gravity, rather than like the HEX USD, where like HEX could pump forever and the people that are trying to trade that could just get wrecked forever. Whereas like if you make a bad trade on the HEX Maxi chart, it's like at least you have the HEX.
You walk away with a good coin.
Yeah, and like worst case scenario is like you overpaid for it. Yeah. But like it's not like you're gonna get left behind, unless I tweeted today. I was like, could a finite stake have an infinite price? Like, because people could irrationally buy it, way beyond it. So like, but I think it's better for if people are going to have the urge to trade, it's probably better that they do it on the HEX Maxi pair, because there's less chance that you get truly left behind, like in a life-changing, devastating way.
That's a good point. I like that idea.
For people to trade on our pair to get that itch. One, because it protects them from themselves. If we can't fully protect them from themselves by training them to sit on their hands and just like be thankful for what they have. If we can't do that, we should at least get them there, and then that extra trading bolsters our liquidity value proposition. So it's kind of a good thing for both the Maxi holders and the people that like need to compulsively gamble. It kind of like lets each of them kind of scratch each other's back, limit the risk to the traders, and boost the value proposition to the Maxi people. So
that was David's value proposition, was that it's a form of gambling within the HEX ecosystem.
Yeah, it's a derivative. Yeah. Yep. And that's exactly what I remember when I first heard about it, and so did like Whales Only. Yeah, that was like our first. Both I think me and him said the same thing. Like, it's a HEX based derivative. I love it. Like, I love HEX, so I would love a derivative based on HEX. And here we are, 60% up. So far so good.
The only disadvantage that I can see with Maxi is something that it took me a while to like come up with. But even when Richard heard it, he said he liked it a lot. This idea that with a traditional hex stake that is more or less like permanent, you know, like you can't trade the stake, you can't sell it early. What you're doing is you're minimizing counterparty risk with your own future self. And I think that, you know, with that being said, it's going to be super interesting, you know, for me to see how Maxi will perform at the next 10x of Hex or the next 100x of Hex. And on one hand, I could see, you know, people having weaker hands, which, I mean, at the end of the day, I think the majority of price appreciation comes from people adopting it and using it as their savings mechanism, not from the 30% APY or the bigger pays better bonus or anything like that. And so I think like my initial reaction of, oh, wrapped stakes are bad because, and I think somebody had to take that perspective, to be fair, that like we couldn't all just be in some like, you know, group think and you know, make a significant change to how Hex like operates in the real world, when even those of us who are on the screen now like didn't predict this kind of a premium this early. Like we're already seeing results that we didn't necessarily predict, still being experts in the space. So that's like my word of caution is just that, like, I mean, this could get, I mean, the premium could get insane, right? Like the premium, I saw somebody in the comments said 300% by juniors. Like, you know, if we think about like how the actual, you know, mechanics go of what really determines the price is supply and demand. And if the Maxi holders are mentally, you know, another way to value Maxi would be to say like, well, how long was somebody waiting to hold, or how much of a return were they looking to get in Hex terms? And eventually the market will tell us how much people want to speculate, because the premium will go up until you reach the point where people, you know, reach their limit and they say, yes, I want to take 3 Hex per Maxi, you know, a week from now, like, you know, and then if that happens too, I think that, I think it's very predictable that more of this type of DAO will be created. And, you know, we could see a future where it's almost like this is like leading the price of Hex itself, that like Hex being the underlying asset that you have to buy, right? As you guys were saying, like if you have to buy it, then there is still going to be buy pressure. And if this is what people want to hold, if this is what people value as liquid shares, then that's certainly not something that I necessarily predicted. But I'm starting to see a world where that could be, because, you know, people like dog coins, right? People pay for JPEGs on the internet, and like, it's okay. I've never shared this statistic, but this is really good stuff. Somebody can make like a whole thumbnail episode just about this one fact. Like in the past year, the volume on the legacy art market, okay, all the art that was bought and sold in the world, not including NFTs, was $50 billion. And the volume in NFTs was 25 billion, which means that if you add those two together, that, you know, people who count statistics are keeping separate for some reason, like NFTs were 1/3 of the global art volume in the past year. Now that's not like, that's just like the last 12 months, not any like calendar year. But and we're already seeing like a decline like month over month in NFTs. But I find that so fascinating and like counterintuitive, and like who would have ever predicted that like 1 out of $3 spent on art would be on like pointless JPEGs.
Yeah, I think that goes to show the irrationality of the markets. Yeah, man. I mean, nobody can predict the crazy stuff that's going to happen.
Yeah.
Nobody.
So I mean, like if there becomes like an even heavier premium on Maxi, like, I could see people, I could see that telling us more about the future value of HEX, because it's already showing me right now at this point that like, either I'm missing something and HEX is more valuable than it should be, or that either HEX is more valuable from a mathematical point, or it's more, people are putting more value. The people who are buying Maxi are saying that they're going to hold to a certain ROI or to a certain length of time that they can basically like approximate, that they can do the math however they're going to, but isn't their buys isn't that real? So the real value of HEX, I think, could be discovered through this. And I never thought about it like that before.
Yeah, you're spot on. Like they're definitely gonna they're kind of like that yin and yang, where they're kind of like, it's really the same thing, because Maxi, it's like a stable coin backed by a steadily growing amount of HEX. And so like, plus the hedgeron, plus all the other stuff, but like, that's the main part is the HEX. And so like, it's like, but it's like HEX in a different fashion, because it's like not just like inflation adjusted. It's like, you're the top, like we'll be especially once the big payday stakes in, we're like the top interest earner, like aside from maybe Godwale, like, maybe his stakes are earning at a higher rate than us. But what I actually think, the HEX USD price, I think actually has a lot to do with it. And what my prediction is that our big discount cycles are going to be at times when the HEX price is running, because if people in Maxi are measuring their ROI in USDC, if the HEX price on itself runs, then they'll be able to tolerate more of a discount, because from like when they got in, with their, they bought HEX at 12 cents to mint their Maxi. Now the HEX price is $12, and so they've experienced 100x just from the underlying. What do they care if it's like a 1.1 Maxi per HEX to like 1 or even less? Because it's like, if you sell at a discount, say you sell at like a 90 or a 10% discount, it's like, okay, you didn't get 100x performance of the HEX, you got 90%, and what do you care? And so like, I think that like when the underlying HEX price goes up, that'll probably unlock a lot of sellers. And I think that's probably why like we haven't seen so much selling now, is because people holding Maxi is really just holding HEX, and people aren't really ready to part with their HEX yet, and they're holding Maxi in this way, and like so they're and maybe they see the strong momentum here and they think the premium is going to be higher in the future, so they're kind of holding off. But I think that like maybe like this will be like a top, kind of what you said, it's like a leading indicator of HEX. Like maybe this will be like a top signal, is like when we start seeing a big Maxi discount, then maybe that's like, that's evidence that maybe the HEX USD trend, maybe there's like signs of trend reversal there. And so, it's good. I think it's good information that the market will be able to see. And I think honestly, another reason why there's probably there's so much premium is because every single person that minted Maxi, they took on the same amount of risk. Like there was no pre-mine, there was no one got free coins, no bonuses based on when you got in. Like it was 1-to-1 for everybody. And so like everybody's cost basis measured in HEX is the same. Measured in dollars, the price varied from, like 11, I think it was 11 cents on like the first day. And then it got up to like as high as like 17 or 18 cents. So like, people's USD cost basis may be different, but everyone's HEX on HEX cost basis who minted was identical. So like nobody got in at like an artificially low rate where, the 60% premium on the price to them, what if someone got in at like a 10x lower price? Because, what if I got in at, what if I gave myself 10 times coins for free. Like, you know, my minting rate was 0.1 to 1. So, you know, I could have done that. And, you know, so like maybe for me, I would have, you know, the 60% premium from my perspective would have been 600%. So maybe that would have activated me as a seller. And so since nobody had that like artificially low price, you know, like everyone's kind of on the same playing field. And so like, there's not like people that have experienced more ROI than others. Like everyone's, you know, equal. And then also because the supply is so evenly distributed, you know, like really, there's not really any one person that could like materially in a long-term fashion, like really suppress the price. And so, you know, there's maybe that's why, you know, like it hasn't kind of returned to earth yet, is because you know, like it was just like the how decentralized the supply is and how equal the minting was. I think that may have something to do with it as well.
I really wonder if like the premium, if we'll ever be able to tell if it's related at all to the average hold time. So, you know, that the market is trying to find how long people are holding their Maxi and what kind of discount they're willing to give themselves in terms of, you know, not holding the shares when they could be, you know, because there at some point will be people selling because maybe they think it's overpriced because, you know, because they're looking at it more from a technical perspective and less from like a FOMO perspective or whatever. I think that's kind of interesting.
Yeah. I'm excited just to see how it all unfolds. It's certainly crazy. And I'm glad that it's like attracting so many people to be thinking about this. And, you know, and I think it's really inspired a lot of people to kind of think about, you know, other ways that, you know, that like the HEX financial utility can be expanded upon, and like what other, because like this is just one such, you know, staking strategy in this pool, you know, and there are lots of other in the idea phase of Maximus. There are many other staking strategies. So, you know, like completely different from like the long term maxed out one. Like there's all different types of ideas that we've, you know, come up, haven't really talked to anyone about, but like, you know, so there's this concept, and to me that's like this premium, and then just like, you know, like how well it was received and how many people minted, like to me that signal that there's demand for this type of like pooled staking. And so, you know, there's definitely some areas that would be really interesting for us, you know, to explore that, you know, kind of expand upon this. But, you know, I think that, you know, we're seeing with more and more certainty every day that there is real demand for this type of pooled staking, which wasn't clear before. You know, because there were pooling concepts right at the beginning of HEX. Like remember those games and stuff, like those, like I think those Hourglass games were kind of like related to, like there was some type of like stake pooling and stuff, you know. So like, and people were, you know, pooling for the pulse X and pulse sacrifices. People, I think, were pooling for big payday, you know. So like there was like, you know, people have been pooling.
People pool for sacrifices now, unwisely perhaps, but
yeah. And that actually should, like, you know, we tried to make ours fully trustless. Like that was like the like key criteria, but we probably could have added, you know, not added trust, you know, but like there is pretty high tolerance for trust. Like realistically, like people, you know, especially when like when there's like speculative aspects to it, like, you know, the risk of the trust that you're giving is all like, you know, what is that compared to like just like the price performance risk? And so like people are actually pretty tolerant of trust. And, you know, because I've, you know, been around, you know, it's not like I came out of the woodworks and launched this. Like there could have probably been more trust than there is. You know, and it's, you know, there's evidence that, you know, with the sacrifices, there was some pooling. You know, we've seen pooling where it's kind of like socially enforced, where like, you know, the person, you know, that, you know, people are friends and, you know, you're trusting your friend, and, you know, which usually works. Like, I don't think I heard of any issues that people had because of, you know, they trusted their friend. There could have even been someone they barely knew, but they, you know, maybe they thought that like that person's reputation was more valuable than what they could gain from, stealing from the pool that they were organizing. So, the pooling worked. Like I hadn't heard of any issue that anyone had. So there is a there is some, but I'm definitely glad that we were on the side of like fully trustless, like, one is also just like for my sanity. Like if there were some functions that only I could run, like I would be paranoid every single day that like something would happen to me, something could go wrong, like I mess up, and then like I just wreck it. So it's like really like I sleep so easily at night because like it's like no one can steal, no one could like compromise me and cause Maxi to fail, or no one could like do anything and cause to me. And so like I actually have no stress. Like I imagine like people that are holding the admin, like I bet the like Do Kwon, I bet he holds the admin keys to UST and Luna. Like he's literally, I can't even imagine what he's going through. Like I don't feel that at all. Like because I don't have the responsibility to keep a price peg. Like I through the contract, it's not me guaranteeing it. The contract is guaranteeing the like one Maxi will at least be backed by one HEX, and there's no guarantee on price peg. So, I don't have any stress from that. I don't have any stress that like I need to do critical work on an ongoing basis that will make Maxi run. Anyone can run the end stake. Anyone can run the mint hedge run. Anyone can redeem. Like there's nothing that I need to do. Like, I could literally just like decide to go off in the wilderness forever and Maxi will continue to operate. And so it actually like that trustlessness wasn't, I mean, a big part of it was just like, I kind of speaking to the audience, I'm familiar with what people demand of smart contracts in the HEX community as a much higher, threshold for that.
We're connoisseurs around here. We like we like good smart contracts.
And they're focused on the right things, like the NFT crowd, they're focused on literally like dog shit. We're focused on the right things. And so I knew that was the audience, but also just like the peace of mind that it gives me, that it's, immutable. Nothing relies on me or any other person to operate. So like, it gives me a lot of like massive stress reduction, like now I just get to have fun talking about it on Twitter, and that's all I can do.
Yeah. We don't need another Quadriga CX situation.
Yeah, that would be a nightmare.
I think there's a Netflix documentary on Gerald Cotton and his mysterious death, or did he fake it, after he had been running the biggest crypto exchange in Canada for a number of years. And, when I guess, I don't know if I should spoil it or not. I guess the bottom line is, it's worth seeing.
Yeah. I listened to the Kraken put out like a 4 or 5 part podcast series on it. And that was really interesting because, that was right around the time that HEX launched, I think, right?
I think so. Yeah.
Yeah. Because it was like, remember when Trace Mayer used to do that like proof of keys event?
Yes.
And so it's kind of like, I think around that time, where that might have been part of the pressure where people were realizing that they didn't have all the funds they had. And yeah, so that was like right when HEX was getting started, which, it is a pretty crazy story. And what's crazy about it is that the other guy, the guy that didn't die, he ended up, being in like, he was that like, he changed his name and then was one of the like, he was in charge of the treasury for Olympus DAO. So Ohm, which like spurred all these Ohm forks, which Ohm was kind of like Maximus in a way. And Ohm, the price went way off their redeemable value. Like they had a treasury, kind of how we do. There's a whole different thing. There's like the whole like rebasing. I don't know. It's like a big game, like where you're pretty much like flipping a 9-sided coin, and like you're hoping that like, there's like the whole like 3-3 meme. There's all this weird stuff with how Ohm worked, but like the guy who was actually had who had sole custody of the private keys of the entire, 100-200 million Ohm treasury, he literally was Gerald Cotton's co-founder. So like a guy who was like involved in this like sketchy thing where he was involved in, like, because from what I understand about the like why Quadriga blew up is because they had either gotten hacked or somehow lost money, and then they were trying to trade to get it back. So there were all these transactions between like where they were trading on BitMEX, trying to get their money back, getting wrecked. And then, so, you know, that the guy who was trading on BitMEX to get it, like he was now in charge of the Ohm treasury, and that caused like all kinds of issues with that. And so like, there's none of that here, you know, where like the treasury is held by the contract. And I think I saw someone in the comments ask about like what happens if someone finds the seed phrase. Like there's no seed phrase for the contract address. Like the seed phrase is unique to account addresses, not contract addresses. Like the account, you know, even though in like an Ethereum account technically is a smart contract, like the production of that account, like part of that is like, you know, generating that private key, which like you can derive the seed phrase from. Whereas with a contract, the contract operates directly how the Solidity code works. So like there's no seed phrase or like recovery phrase in the contract. Like it's not a normal wallet. Like you can't just like go onto MetaMask and use like there's not a private key for it. And so, you know, that like key difference, you know, which shows like, you know, like that whole other corner crypto, like they have very, very high tolerance to trust. Like they're trusting the guy who caused the whole Quadriga thing. Maybe, you know, maybe the gig was up and, you know, Gerald Cotton was like, all right, dude, I'm going to just go over here and just like peacefully die. You know, I'm going to go enjoy myself. And like that guy who was involved in that whole scandal, like he was now in sole possession of the whole treasury. Like, you know, the Hexkins are like on this elevated standard of like, you know, what we tolerate. Whereas like all these other, especially like the class of 2021, I feel like every new class of crypto people, like it's like the quality, maybe, you know, maybe that's just because larger numbers, you know, like it averages out. And there's obviously great people coming in all the time. But like what I noticed specifically about like the NFT crowd and like the kind of like the people that came in like the 2020 DeFi cycle, like a lot, but the people that didn't come into Hex, people that just came into crypto but not Hex, they have really like they'll trust anything. Like they very low standards compared to what we have. And so, you know, like maybe there's an audience for, you know, like trustful thing, but, you know, but because like, you know, at least like with the Ohm, they got to experience that whole debacle when it became clear that, oh, the guy who's in charge of our treasury, he literally stole all this money and like maybe, you know, had a part in his partner dying. Like there's, you know, none of that here. So maybe like, you know, we can attract that cohort into like the, you know, all those people that are getting wrecked on, you know, like DeFi stuff that has admin keys, requires trust, needs someone to like backstop the price, or needs someone to like perform the task, or needs the admin key that's only available, or the API key that's only available on the official front end. Like maybe those people will just get wrecked from that experience and then seek, you know, less risky, more stable things. And I think that that's like really what we're producing across the board in kind of this broader Hexican ecosystem.
Yeah. I think it's, you know, the opportunity for people to have something trustless versus, I mean, I don't even think most people understand what that word means. Like, I think the average person on the street hears the word trustless, and maybe it's just because like I worked with people who are like super low socioeconomic status for 7 years, and like that's what I kind of consider like the common person to be, is like not all of us crypto experts and people who, you know, have advanced degrees in certain things, or probably should if we counted YouTube University as, you know, an accredited place. But I think that, you know, even when I look at the macro stance of crypto and how it could evolve, I see that like, so for example, you know, people who live in other countries where inflation is high, if you talk to them about Hex, they're like, why would I time lock my money? Like money is worth less in the future. Like they don't even think about it. It's like, it's a subconscious like force in the world today. It's like, because we're living in debt and because our debt is fueled by inflation and financialization of everything, like the greatest minds in the world are not working on, making medical breakthroughs necessarily. They're able to go, or teaching the next generation how to solve problems better. It's like people are focused on extracting as much value as they can out of the present moment, because everything in the future is going to be more, there's going to be more people competing to like scam you, and like there's going to be more dollars printed, so dollars are less scarce. And just like, if you think the US inflation is bad, you should really think about how the dollar, being the reserve currency, exports the majority of our inflation to other countries, because in order for like Canada to trade with Spain, or like any country to country transaction, like their GDP has to be settled in dollars in terms of what trade they do. And so that makes everybody around the world in every economy a buyer of dollars to a large extent. Maybe there's like little bubbles that aren't touched by that directly, but the fact that the world is existing in such a state where you're stealing from your future self instead of paying your future self, I think like people are more like set up to walk into scams and to like not care. I mean, like, so we could take the example of like, scams are highly profitable. Like, and so, in an honest asset like HEX, where it's like rewarding savers, and savers are always going to, currently probably like a minority of the population of people, right? Like in reality. And so like, what we're really talking about is really changing something bigger than just, people who are able to gamble on something, or people who have a savings mindset. I think that, HEX is different than everything else that's honest, that's competing with scams, because scams have this huge marketing budget. So normally they would win. But in HEX, we have like a human resource type of effect, where we see a bunch of people getting financially free and then donating their time, like all of us are doing right now. And so that, I think that eventually we'll see probably better competition between like us and scams, because we'll have the marketing budget, because we'll basically move on from this issue of high gas fees, and then we'll be able to put all of our efforts into building a better stack, a full stack of products, stablecoin, wallet, but really the biggest thing is PulseChain attracting millions of people into the space. I think that there's a lot of game theory that's going to operate coming up here. And I think that, if we have products like Maxi that are meeting people's needs in terms of being able to get trustless yields, and being able to have some, as much as I hate to say it, like optionality, so that they can shoot themselves in the foot and sell at the next 10x, like maybe that's the only way forward.
Yeah. I mean, it's kind of like a blend of all those things. And and I kind of, to touch on what you said about like how like HEX is kind of like, it's kind of built up a culture of knowledge sharing, and that I think is so important. Like, what other crypto community has the volume of like these live streams, where even if like a lot of the stuff is kind of, because there's only so much you can say and so much analysis that anyone can do, but like the importance of like the live interaction and like the comments in the chat, and like all the people that are like, like kind of that cycle that people go through, where like they're learning about it and then they start speaking about it. Maybe they create a channel, they reach their, corner of the world. And like, I think that knowledge or that culture of knowledge sharing, that's like a huge, like fundamental advantage that, that we have, where like, is the own community, or is like I don't see are the Bitcoiners on live stream in this fashion? Like it's I feel like it's really unique to HEX, that like this kind of like network of people that like live stream together and make their own videos, make videos together, do all this stuff. And so like, that to me is like a really powerful force that we have going for us, is just kind of that culture. And I think it kind of starts, we all came to know Richard from his like 8-hour live streams where you just go through and answer every question in the chat, and like kind of that like culture of knowledge sharing. I think that like, starting with that's been a serious force that's kind of helped us, outperform the scams and, outperform like, the other stuff. And, with even stuff in crypto, like, not everyone gets wrecked because of scams. A lot of people just get wrecked because they make a bad trade or they make a bad investment. And so like that culture of knowledge sharing, I think, has helped protect people from that. And, you can't help everybody, but it's at least like, putting, ourselves out there and trying to make an impact.
Yeah, for sure. I think that our community is a function of the rules of the game of HEX. It's the game theory that is causing people to act in certain ways. And that's kind of where my psychology background comes into play and everything. David, I know that your time is short. Do you have any other thoughts that you can share?
I only had one technical question. Is there a burn function in Maxi?
Yes.
If you call the burn function, you burn your Maxi tokens. Does the HEX and Hedron that would have been given to those Maxi, those are redistributed to the other Maxi holders?
Yes.
Maxi?
Because the way that the end redemption rate calculation works is so each time that Hedron is minted, the contract measures how much Hedron it has and then divides it by the total supply. So when you go on Etherscan, you click total supply, that number there.
Yep.
That's how it sets like the Hedron redemption rate. And then for the HEX redemption rate, when the stake ends, it measures how much HEX is in the contract and then divides by total supply. And so when there's a function burn, it's a standard ERC20 function burn that you can run. So I don't bring attention because I don't want people to actually just burn their Maxi testing it out. But if you run that so that burn function is what the redemption function calls when you redeem your HEX after the fact. But like when the redemption window starts, the redemption rates are already set. They don't change after that. And so when they burn, the number that's returned when you click total supply, that reduces. So I think if you send your coins to the zero address, I actually don't know if just sending them to it actually adjusts the supply. I've never tried that, but I do know, and I tested on testnet, that when you click burn and you set how much you burn, the total supply decreases. And so that would make the redemption rate go up the next time it's measured. And so that was kind of what when I was there talking about what could make the premium just pump to unreal numbers. Like if someone in the Maximus community organized a sacrifice where you had to sacrifice in Maxi, so that pushes the price up just for people buying to sacrifice. And then they said, okay, guess what? We're going to burn some of this. Then that burnt supply reduces the total supply. And so that would mean, because the redemption rate is total HEX divided by total supply of Maxi. If that denominator is now smaller, that redemption rate is now higher. And so the Hedron and HEX is distributed amongst the remaining people that didn't burn their Maxi. Or the better thing is it's distributed amongst the remaining Maxi that wasn't burnt.
Yep.
So yeah, it does reduce that supply, which impacts the redemption rate.
Very cool. That's very cool. Yeah, awesome. Well, all right, guys. Well, yeah, I do need to skedaddle. But
yeah, I'm gonna have to hop off here too. I was past my hard stop, but it's all good. I just have such an awesome time with you guys. Thank you so much.
Yeah, thank you guys so much for being on, and I'm looking forward to the next time we all get to chat. But for now, yeah, it's been great. So thank you. All of the links for these guys are in the description below. So go ahead and take the time right now to look at the info below on YouTube and click the links so you can follow David and Dipcatcher on all of their social media accounts.
Perfect. Yeah, thank you so much.
My pleasure.
All right, guys. Have a good night. I'll see you later.
Take care.
Awesome. Take care, everybody.